Equity futures roll over a little bit. You're used to this, aren't you? We're positive 1.65% on the S&P 500. From New York, alongside Lisa Bravitz, I'm Jonathan Ferro. Tom Keane on vacation. We're live on Bloomberg Radio.
Vatsal Shah is Senior Project Engineer at Mott MacDonald, a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology, and as an adjunct professor, is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities. What are we doing to develop that? What will happen to the city on the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that? So in 10 years, we're actually ready to take on those challenges when we have our first development in the water. NJIT also has been doing a lot of work in self-healing materials. So taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
This is a Bloomberg Money Minute. Futures point to more gains after a higher close on Wall Street yesterday as Washington, D.C. and other global...
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Policymakers take steps to contain the economic fallout from the pandemic. The S&P 500 rose 0.5% yesterday. Crude oil is climbing this morning after rising 24%, the most ever. Goldman Sachs is predicting that filings for U.S. unemployment benefits are poised to surge to a record 2.25 million this week. That's based on an analysis of preliminary reports across 30 states, with businesses shutting down because of coronavirus containment efforts. Teva Pharmaceuticals said it plans to donate 6 million tablets of a malaria drug touted by President Trump as a potential treatment for the coronavirus to help U.S. hospitals meet a potential surge in demand. A Senate Republican proposal responding to the economic devastation includes $58 billion for loans to airlines. Gina Cervetti, Bloomberg Radio.
The market's in focus every business day. The P&L Podcast with Paul Sweeney and Lisa Abramowitz.
Are there some sectors that you want to have more or less exposure to?
What's behind this engine of gains?
Analysis of the day's Wall Street action.
The U.S. market looks relatively safe.
From Bloomberg Intelligence, Bloomberg Opinion, and influential newsmakers.
Ward McCarthy joins us right now.
P&L with Paul Sweeney and Lisa Abramowitz. Listen today on Bloomberg.com, the Bloomberg Business app, or subscribe on Apple Podcasts. They don't just talk to the most important people.
Is it as ominous this time around?
They talk with the most interesting people.
Are they taking this seriously?
Bloomberg Markets, weekday mornings at 10 Eastern on Bloomberg Radio. Bloomberg, the world is listening. Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We are live on Bloomberg Radio alongside Lisa Abramowitz. I'm Jonathan Ferro. Tom Keane on vacation. Here is your Friday morning price action. Coming into Friday, Monday, Tuesday, Wednesday, Thursday, the S&P 500 down around about 11%. Into this morning, equity futures are firmer by about 2% on the session so far, though we are rolling off session highs. Dare I say that correlations are slowly starting to make a little bit more sense in some places, kinda, with the exception of maybe Treasury still. Yields coming in by around about 14 basis points on 10s to a little more than 1%. But in foreign exchange, I take just a little bit of encouragement away from unlocking just a little bit of dollar weakness after a massive week of dollar strength. Do you think the signs there, Lisa, that finally maybe we're addressing some of the liquidity issues, the pockets of stress, just a little bit more this week?
I think that that's the story of today. I don't think that you can glean any comfort looking at the economic data or the developments about the coronavirus, but it does appear that central bank liquidity injections are starting to bleed into markets. Also, gold higher today, indicating that perhaps the fire sales are being met with buyers that are willing to actually bid up the prices. But the whole idea here is what we were looking at were Treasury yields going up for all the wrong reasons, as you kept pointing out, basically because there weren't enough people on the other side with cash to buy them. And now you're seeing them go down, and not necessarily because people are pricing in a risk-off scenario, but because there are buyers and they're not necessarily looking just for cash at all costs.
We've been stuck in this really nasty doom loop between rising credit risk and this huge commodity rout. It's been amplified by liquidity issues. It's contributed to some brutal cross-asset volatility. And this week, in fact, over the last 2 weeks, let's say, central banks have been very focused on addressing the liquidity issues. And any success there, I think, would actually go some way to really starting to put a lid on some of the vol we've seen. If you can't suppress volatility in the Treasury market, you've got no hope of getting it done in the risky parts of credit and the equity market as well.
Yeah, and you have no way of knowing and parsing out the distinction between liquidity risk and credit risk. And I think that that's also driving a lot of fear here. People just pricing in mass defaults, mass bankruptcies, or people just dealing with fire sales. On the flip side, not to overstate the lack of volatility, I mean, you did have NASDAQ futures that were limit up at one point overnight. So we're still in hard, no, it's not gone, but we're still in highly tumultuous markets. But you're absolutely right. You stabilize the Treasury market. That's the absolute crucial step in at least beginning toward some sort of stability.
Let's bring in Patrick Armstrong, shall we? Plurimi Wealth CIO. Patrick, always great to catch up with you. I asked this question a little bit earlier in the program to Steve Whiting of Citi, and he said it's really difficult to do. How do you draw a distinction between a market signaling a functioning issue and credit risk, credit stress? How do you do that right now in fixed income, Patrick?
Very difficult. And you've mentioned liquidity, I think, several times in the lead into that question. And people want liquidity right now. They're running away from anything where they don't know what it is with certainty. And the only thing you know with certainty is if you've got your money in U.S. dollars in cash, you know what you've got at least. And markets function best when people are willing to give up that safety of cash and put their capital to work, expecting a higher return. So inflation is one way you punish people who have their money in cash. And I actually think that's probably where things are going to go. We're in an environment now where there's going to be massive fiscal stimulus. There's going to be much lower tax receipts. And we've already got debt to GDP in the U.S. at 100 last year, and that's going one direction. So I'm actually thinking the longer-term treasuries, they've sold off about 12% since March 9th, but that's from a completely overbought situation. I don't know if you need to add liquidity into the treasury market as a function of just being overbought.
Can we talk about the credit market? Central banks have really struggled to put a floor under credit markets. The ECB has stepped in big time this week, Patrick. Do we just trust them that they can get this done with a package this big?
Usually it's a bad idea to just basically buy what the central banks are trying to stabilize, because it's a hard thing to stabilize. The bond market and the credit market even is difficult, but it is a floor under credit right now for what the ECB has done. The Fed hasn't done that yet. That's probably the one lever they still can pull at some point if we do see credit spreads continue to widen out. We've been adding a bit of credit recently. We've bought the liquid LTF we bought about a week ago, moving into corporate credit as you are getting some spreads widening. Junk we haven't bought yet, but when you've got spreads of 800 basis points, it's been pretty rare that you've lost money, just because when companies do go bankrupt, it's not zero recovery typically, and I don't see why this situation would be different in most industries we're looking at. So we've not really added junk yet, but it's something we're looking at because the spreads are very wide.
Let's unpack that a little bit more, the idea that you are starting to buy investment-grade debt. Can you give us more of a sense of what you're looking for in order to buy, and whether this is basically a belief that the credit risk aspect of this has been overpriced or sort of overstated by the liquidity pressure?
Yeah, I think liquidity pressures definitely put spreads out very wide, and the ETFs are very instrumental that they give you liquidity on underlyings that may not be quite as liquid. And when we've been buying a LQD ETF, we've been purchasing it below the NAV on what the bonds are trading at, just because there's so many sellers there. In Europe, we've been buying short-term bank debt. In Europe, I've been used to having a negative carry on my cash positions, and now with bank spreads widening out, even on 2-year paper from banks, you're getting positive returns in euros, and I actually feel very safe with the bank debt. I think the stress tests that have been put in place are real. Reserve requirements are very strong, and the off-balance sheet liabilities from 2008 and derivatives trading, prop desk risk, all of those things have really been mitigated, I think, with regulations over the last 10 years.
So, Patrick, my signal that I take from that particular trade is you're more worried about an earnings recession that would hit the equity than you are about a balance sheet issue that would hit the debt.
Yeah, the earnings are going to be decimated for a lot of industries in Q2, and we're not looking at PEs because I don't think anyone knows where the earnings are going to be for a lot of these companies. But equities are looking attractive on price to book, and that's a much more stable measure. On EBITDA, that's about as far down as I want to look on the revenue statement. And EV to EBITDA a month ago, the S&P 500 had never traded at a higher multiple, and with the 30% sell-off almost, we're down to almost normal on EV to EBITDA. So the EBITDA will probably be overstated still on estimates, but it's not as volatile as the earnings side of things.
Patrick, what you're saying makes a lot of sense based on history. Unfortunately, in the past 2 weeks, history has been basically thrown out the window, and we've seen every record broken pretty much across the board, just in terms of the speed in which this has hit. And I'm wondering, what gives you confidence that history will provide a guide, history of earnings, history of recoveries, at a time when we have never seen this before? The entire global developed market basically shut down.
Yes, it's going to be an unprecedented hit to GDP, I think, in the United States. So I think probably Q2 GDP will be the worst number ever. But we're dealing with the impact and prevention of a spread of a virus that I'm fully confident we get past. So there's developments in treatment. There's definitely going to be developments in a vaccine. It's a short, sharp, very painful hit to the economy, but I'm very, very confident we get past it. I'm not sure when. But I think every day with the steps that are being put in terms of isolation and quarantining and all the efforts from drug companies on treatments and fast-tracking things there, this isn't going to be a permanent solution, permanent headwind for the economy. So I think it's anything that has an asset value isn't going to be totally decimated because it is short and sharp, and I expect the rebound to be very sharp as well when we do get past it.
Patrick, the question I'm about to ask is deserving of a very long conversation, so forgive me, you've only got 45 seconds. I remember the conversations that we had going all the way back to the Eurozone debt crisis years and years ago, and your views on Greece. Are your views the same as they were on Greece then, on some of these companies, these industries now, asking for a bailout?
I don't think you should be bailing out a lot of these companies right now. I think the airlines are getting a lot of press with all the share buybacks they've done, and that's an industry Trump's alluded to, that they would be front of the line for a bailout. The employees, The bondholders, maybe. Those are the parts of the capital structure and basically participants of the companies that maybe deserve the bailout. The equity holders, I think when you buy equity, you get the upside, but you should have to take the pain of the downside as well. So I think bailout should come in the form of nationalizations where governments take equity stakes in companies if they are giving them loans, much as we've seen in the banks in Europe, things like that. It's not necessarily good news for an equity holder, but it's good news for the citizens and for other stakeholders.
Patrick, great to get your views on the programme. Looking forward to catching up soon. Stay close, won't you? Patrick Armstrong there, Plurumi Wealth, CIO. Let's turn to the Bloomberg NJIT STEM report now, shall we? It's brought to you by New Jersey Institute of Technology, ranked #1 in the nation for student upward economic mobility. Learn more at njit.edu. Here's Bob Moon.
Jonathan, Lisa, good morning. Here's what's making news in science, technology, engineering, and math. Sports are on hold, theaters are closed, and suddenly millions of Americans are stuck at home in self-imposed or involuntary isolation. And that's making Netflix, Amazon, Hulu, and other streaming services the entertainment industry outliers. The recent launch of Disney and Apple services and the upcoming arrival of NBC Universal's Peacock and Warner Media's HBO Max streaming options appear to be well timed. Wedbush Securities analyst Dan Ives predicts demand for streaming services is going to increase exponentially over the next 3 to 6 months, as much as 20%. Jeffrey Vlidarzak of Pivotal Research Group says the masses who are suddenly shut in could also end up reconsidering the growing trend of cutting the cord, and broadcast networks facing rating declines also could see a boost in viewership. Streaming may be the lone bright spot for Disney, which has been slammed by the coronavirus. It's had to suspend theatrical and TV productions and delay new releases. It's been forced to close Disney resorts, and the sports lull threatens to take a toll on its ESPN channels. And the earliest arrival of the vernal equinox in 124 years, given leap year and daylight saving time considerations, could end up adding some spring fever restlessness. The official start of spring in the northern hemisphere came at 11:49 and 28 seconds last night in the Eastern time zone, bringing roughly equal parts to night and day. That's the Bloomberg NJIT STEM report. Lisa, Jonathan.
Thank you so much, Bob Moon. Right now, let's get the news. We've got Michael Barr. Michael.
Lisa, John, thank you very much. California Governor Gavin Newsom says when it comes to the coronavirus, this is a moment where we need some straight talk. Newsom ordered a shelter-in-place mandate for the state's entire 40 million residents. The move is the strictest yet in the U.S. to stop the spread of COVID-19. Newsom says the order restricts non-essential activities. However,
you can still take your kids outside practicing common sense and social distancing. You can still walk your dog. You can still pick up that food at one of our distribution centers.
Newsom says it is projected that as much as 56% of the state's population, or more than 25 million Californians, could be infected over an 8-week period. Mayor Bill de Blasio claims that federal help for New York has not arrived despite about 4,000 COVID-19 cases in the city.
Here in New York City, we are 2 weeks or 3 weeks away from running out of the supplies we need most for our hospitals.
New York officials say there are more than 20 deaths in the city from the COVID-19 outbreak. Several U.S. senators are accused of profiting off the pandemic. Reports overnight say at least 4, including Intelligence Committee members Richard Burr, Dianne Feinstein, and James Inhofe, sold millions in stock in the weeks following the coronavirus briefing. The fourth, Kelly Loeffler, who is married to the chairman of the New York Stock Exchange, said on Twitter that this is a ridiculous and baseless attack. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John.
Michael Barr, thank you, sir. We'll try and talk about that one a little bit later. I think it deserves a little bit of a conversation, Lisa.
Agreed.
Equity futures right now up around about 2% on the S&P 500. In your bond market, your treasury market, a sizable bid. Yields coming in 14 basis points, south of 1%, again on 10s. Your yield 0.997%. And in foreign exchange, after a massive weekly gain for the US dollar on the week, the biggest week of gains going back to October 2008 on the session, some dollar weakness from New York. This is Bloomberg Surveillance.
With a Bloomberg Business of Sports report, I'm Michael Barr. Japanese Prime Minister Shinzo Abe reiterated his desire to hold the Olympic Games in their complete form and indicated he wasn't thinking of reducing the scale of the event or holding the Games behind closed doors. Speaking in Parliament, Abe said that the Games must be safe and secure for both athletes and spectators, and added his goal was for the Games to be held without reducing the scale and with the spectators also able to enjoy the feeling of the event. The chief of the NBA's Players Union says the players are seeking clarity on the financial picture of this season suspended by the coronavirus. NBA Players Association head Michelle Roberts says when it comes to basketball-related income, I would absolutely like a do-over. It's not a happy time. The NBA doesn't have answers either. It all depends on how long it takes for the virus threat to subside. And that is a Bloomberg Business of Sports report. I'm Michael Barr.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President, Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Global News 20.
Leave it to the New York Times to make the most intelligent pop music podcast out there.
Welcome to the New York Times Popcast.
On the Popcast, the Times music staff gets together for a weekly roundtable on the hottest topics in popular music. From award show autopsies and reactions to new releases to difficult-to-process scandals and emerging themes in the music landscape, hear distinguished music critics share their perspectives on the latest music news, songs, albums, and artists of note on the New York Times Popcast. Search and favorite Popcast to join the conversation.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures are climbing along with stocks and bonds globally as investors review the unprecedented government measures to shield jobs and economies from the accelerating coronavirus pandemic. The dollar is halting an 8-day rally. Contracts in the three main U.S. equity indexes all advancing, with NASDAQ 100 futures briefly hitting their limit up. Traders are facing extra volatility when options and futures on indexes and equities expire today in what's called quadruple witching. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up 48 points. Dow futures up 478. NASDAQ futures up 232 now. The DAX in Germany is up 4.1%. 10-year Treasury up 1 13/32. The yield 0.99%. The yield on the 2-year 0.39%. NYMEX crude oil up 2.4% or 61 cents at $25.83 a barrel. COMEX gold up 1.8% or $27.20 at $15.0620 an ounce. The euro 1.0726 against the dollar. The British pound 1.1748 and the yen 110.15. The VIX 68.24. And that's a Bloomberg Business Flash. John and Lisa.
Karen, thank you. Thank you very much. Great work as always. Let's pick up on the FX market talk, shall we? What a week it has been. And it's been brutal if you're anything but the US dollar in G10 and beyond. In G10 on the week, the euro is down around about 3.5%. Sterling is off by 4.3%. The Norwegian kroner is down by 9% almost on the week alone. If you think that's brutal for G10, check out EM. The Russian ruble down by more than 8.5%, Lisa. Dollar Mex, the Mexican peso, down a little more than 8% over 5 trading days.
Mexican peso reaching a record weakness versus the dollar. And the moves were parabolic. I mean, these are not moves that you see, and they were not moves that were controlled. And as you said, do levels even matter? And the answer was no, they don't. All technicals, throw them out the window, because nothing seemed to go back to historical norms.
Yeah, and this is no disrespect to the technical analysts that listen to the show, but your patterns on charts in the FX market this week didn't really count for much at all. We just sliced through support levels like a hot knife through butter. Joining us now to discuss emerging markets, I'm pleased to say, is William Jackson, Capital Economics Chief Emerging Markets Economist. William, let's talk about it. Just how much damage is being done to some of these big EM economies?
Hey, thank you very much for inviting me on. It's a really difficult environment for emerging markets for the past 2 weeks, really. We've seen a lot of turmoil in financial markets, like you're mentioning. The Mexican peso, the Russian ruble have fallen particularly sharply. And that's meaning that even some of these central banks can't even provide the support that we're seeing elsewhere in the world. Just earlier today, the Russian central bank left interest rates unchanged. We've seen big cuts in the US, the UK, the ECB restart bond purchases, big rate cuts in Chile and the Czech Republic, but the Russian central bank couldn't do so. It's unclear yet whether the Mexican central bank will be able to cut rates when it meets next week. And more generally, it reflects some of the economic damage that's happening to the world economy, and emerging markets are joined up in this too. It looks like we're going to be seeing some very big falls in output in the second quarter.
William, we talk about the potential recession in the U.S., in Europe, in China, at least a quarterly decline, the slowest growth in decades. What does that do to the emerging markets? I mean, just can you put it into perspective in terms of what type of recession based on history we could be expecting in the developing world?
Yeah, I mean, obviously there's a lot of uncertainty when it actually comes to putting any numbers on this, but it does really seem to be a perfect storm. Almost everything that's gone wrong has gone wrong. So we're seeing likely big contractions in GDP in the very largest global economies, like you mentioned, China, Eurozone, the US. So global demand is weakening. That's really bad for these export-oriented economies. Tourism has come to a standstill. Very difficult for Mexico's economy, for example, or Turkey's or Thailand's. Commodity prices have collapsed across Latin America, parts of sub-Saharan Africa. It's a really difficult environment. So it looks like there's going to be a bit. Now, in terms of what that means in numbers-wise, it probably means we're going to be GDP over this year as a whole, at least in the global economy, might even be weaker than in the global financial crisis. And for most emerging markets, it looks like it might be on a par to the global financial crisis, or perhaps for Latin America, for example, comparable to 1982 at the start of the debt crisis there.
Wow, some stunning numbers. William, great to catch up with you. William Jackson there, Capital Economics Chief Emerging Markets Economist. And apologies to our listeners that may have struggled to listen to some of that because of the line. We will work on some of those technical issues for you over the coming hour. Lisa, whenever I sit down with an emerging market central bank governor, and I've spoken to many, whether it's Mexico, Turkey, the likes of South Africa as well over the years, I'm always thinking about a couple of things. Just a very simple dilemma that they always have to face. Downside risk to growth, upside risk to inflation. It's something that the developed market central bank governors don't have to spend a whole lot of time thinking about. But for these guys, the big problem right now, if this FX route continues, their ability to offer comfort through lower rates to cushion growth is eaten away and eaten away and eaten away. And that's one of the reasons, just one out of many, that you should be worried about what's happening in EM off the back of this currency move.
Well, it's what we saw in Turkey, right? That sort of downward spiral, and that was considered an idiosyncratic situation. Well, now we have an idiosyncratic situation that is the world. So you have basically everybody having this issue at the same time. Today you are seeing a bit of dollar strength, which is giving dollar weakness, which is getting a little bit of a reprieve to emerging market currencies. And you just wonder how long that can persist. And if that is the sort of trend going forward, does that give enough of a breathing space to some of these economies I don't know.
Yeah, I've got in the habit this week of asking questions that people can't answer because they're impossible questions to answer, so I'm sorry for asking them so many times. But one of the impossible questions
You're not sorry. Come
I asked Steve Englander of Standard Chartered an impossible question to answer, which is how much of the dollar move this week has been about liquidity issues and how much of it is about fundamentals. And if you took something like, let's say, cable, which had a 114 handle, the pound against the US dollar earlier this week, if we didn't have the dollar liquidity issues, where would cable be otherwise based on just the fundamentals?
I think we're actually going to get some answers to that exact question next week, because it does appear, based on early trading, and this is an extrapolation, and this probably is something that I will be criticized for saying later, but with all of the FX swap lines that the Federal Reserve has put into place, and they've expanded them now to additional central banks, it does appear that there is some stability, some extra liquidity that is being bled into the markets, and you're seeing that reflected today in trading across asset classes. And you have to think that will at least give a sort of bottom here that will at least allow fundamentals to take over a little bit.
You're not saying that with much conviction, are you?
No, I'm not.
This market has a habit of making forecasts look really, really bad in about 5 minutes' time. But I take the point, and I think it's a valid one, that if we can unlock some of those liquidity pressures, then maybe we'll start to see a different FX market. If we can tackle some of the liquidity issues in treasuries, then maybe we can get down some of the volatility worldwide and cross-asset in a much bigger way, or at least make some progress. Alongside Lisa Bravitz, I'm Jonathan Ferro. Tom Keane on vacation. I understand he'll be back with us on Monday.
Yeah.
I'm going to consider giving him the green light this weekend. If you want Tom back, email me and I'll try and work something out. Equity futures are positive, up 2.5% from New York. This is Bloomberg Surveillance Live on Bloomberg Radio.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Why is delivering the best client experience a top priority at BNY Mellon's Pershing? Michelle Feinstein, Director of Client Engagement, explains.
Today's investors want a financial relationship that's on demand, customized, and leverages the latest digital technology. At BNY Mellon's Pershing, helping advisory firms and broker-dealers create great experiences for their clients is our priority. Through our integrated wealth experience, we give you a high-touch service, flexible technology choices, and expert insights, so you can deliver a highly personalized experience to your clients at every step, from onboarding to wealth planning, to performance analysis and more. And because we're part of BNY Mellon, you'll benefit from more than 230 years of strength and stability. At Pershing, we're personally invested in your success.
Visit Pershing.com to learn more about Pershing's integrated wealth experience. Pershing LLC and Pershing Advisor Solutions LLC are both members of FINRA and SIPC.
This is a Bloomberg Money Minute. Futures are rising this morning as investors review the government measures to shield jobs and economies from the accelerating coronavirus pandemic. Crude oil is also continuing to rebound this morning after rising 24%. The S&P 500 yesterday was up 0.5%. Meal kit delivery company Blue Apron says it's seen a sharp increase in demand for its mail order kits over the past week as Americans look for alternatives to shuttered restaurant dining rooms and barren grocery store shelves. Blue Apron said it's boosting capacity for future orders and expects to be able to fulfill the increased demand by the week of March 30th. Walmart is hiring 150,000 temporary workers to meet surging demand for everyday goods. The new employees will largely work in distribution centers, and many will become permanent staff over time. The retailer is also giving its hourly employees bonuses. Gina Cervetti, Bloomberg Radio.
Two people who are as fascinated by the markets as you are.
What's your sense of the competitive landscape in the cloud business?
Lisa Abramowitz.
People were talking about potential regulatory pressure.
And Paul Sweeney.
Are you seeing flows into ESG ETFs?
Bloomberg Markets.
What's your main conversation today with some of these corporate executives?
Weekday mornings at 10 Eastern.
They're spending a lot of money there.
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. We have to get it right the first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
We are being taken out of our comfort zone by the coronavirus.
Dollar weakness is pretty much a good thing for a lot of the rest of the world.
Finance.
We are going to see a global demand contraction this year, most likely, for oil. The financial health of the business sector has deteriorated somewhat.
Investment.
Obviously, the value in high-vol stocks are going to continue to suffer.
It looks as though the bond market is talking itself into a recession here.
Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz on Bloomberg Radio.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance. Let's get your Friday morning price action after a brutal week once again. The S&P 500 coming into Friday down about 11% on the session, up 2.4 on S&P 500 futures. In the bond market, the bid returns to treasuries, yields aggressively lower, down 16 on a 30-year, down 14 basis points on a 10-year to 1% precisely on a 10-year yield. In foreign exchange, dollar strength through the week, one of the biggest weekly gains for the US dollar on the week since October 2008. On the session, the dollar showing just a little bit of weakness against the euro, a lot more against the pound. Sterling rallying by a little more than 2 percentage points. Alongside Lisa Abramowitz, I'm Jonathan Farrow. I feel lucky and privileged to be with you at a really, really tough time and be with you through the week as well. I'm looking forward to being with you through the next couple of months too. Tom Keene is on vacation. A number of minutes ago, I did say, if you want Tom back, write in. And guess what? Yes, people have written in. They want him back.
Aww,
this is what people said.
Happy now.
Tom back ASAP. Then Damien sent me a GIF and said, this is a tweet in support of Tom Keene's return. And the little video is a car full of monkeys going absolutely crazy. And I imagine that is what they think Tom Keene is like in the studio trying to do a radio show.
Is it that far off? Well, I will say that that it is encouraging that people are excited to have him back. We really do want to have him back. I think he will come back.
I'm looking forward to having him back. Monday, I understand we can get Tom Keene back on Bloomberg Radio, and I look forward to doing it. What a week it has been for global markets. So much stress out there, and a thing that we've been exploring, Lisa, over the last couple of weeks is just the speed of the move. The pace of this move has been absolutely brutal, and I think we've picked up on some stats, not just in the equity market, but on credit. And before things settle down in equity, you've got to keep your eye laser focused on what is happening in credit at the moment. Investment grade bond flows, the outflows, smashing records. We've talked about that. We've talked about high yield spreads. Blew out another 249 basis points this week. 4 sessions, 249, unreal. And something you've been talking about, triple Bs. So for people who aren't familiar with the structure of the credit markets and the ratings around them, you have investment grade and you have junk or sub-investment grade, high yield. Investment grade is rated AAA all the way down to triple B, and then you drop into high yield. Triple B spreads, huge chunk in the investment grade universe, as many of our listeners are familiar with that story over the years. Now the widest since 2009, and Lisa, it's happened really quite fast.
What's concerning to me is that the benchmark for all of these statistics that you keep mentioning, 2008, 2009, the financial crisis, with credit and some of the actions that we have seen, we have blown through 2008, 2009, and are hitting record weakness, record pace of declines. And this just raises some key questions, and we've been talking about this in an ongoing way. Is this pricing in a mass downgrade of that triple B sector and possibly the fallen angels and just an absolute mass degree of bankruptcies and insolvencies? Or is this a liquidity issue, or is this a combination of both that will have to get parsed through and could potentially be opportunities for investors, the likes of which are Howard Marks, who says that he's buying? I'm struggling to understand that, and I think everybody is, because the baseline is just a big question mark.
Mohammed Al-Arian out on Twitter right now, and looking forward to catching up with Mohammed at the top of the 9 o'clock hour, 9 Eastern on Bloomberg TV a little bit later this morning, questioning the hope of whether the wave of forced selling is over. Let's bring in a guest on that, shall we? Mike Bell, JP Morgan Asset Management Global Market Strategist. Mike, we have had this forced selling, a situation in many markets, including in treasuries, where we have this moment, a worrying moment, where it's sell what you can, not what you want. Are you convinced, or is it too early, that this wave of forced selling is over?
Well, I think what you were saying on credit there is important, because we've still got downgrades to come, in my opinion. Historically, it takes a while for the rating agencies to actually get up to speed with the hit to revenues that looks likely to come through. So I think over the next 6 months, you're going to see a flow of downgrades coming through in that treble B space. And then you will see forced sellers as some investment grade bond funds, some insurers, etc., who aren't able, either for capital reasons or just because it's not part of their mandate to hold those bonds, will be forced to sell them. So I think there's potential, despite the move we've seen so far. I mean, looking as of yesterday's close, I think spreads were at about 3.3 for USIG. If you look back to 2008, they widened out north of 5%. So I think we could still see further widening, particularly for some of those treble B names that end up getting downgraded. We estimate that about 5% of the index could end up getting downgraded, and therefore we still favor an up in quality approach within credit.
Forced selling, you think, is expected to be ongoing. I want to talk about some of the forced selling of the past week. We got data from Lipper saying that investors withdrew an unprecedented $35.6 billion from U.S. investment-grade bond funds this week. John was mentioning this before. The prior record was $7.3 billion, so absolutely blowing it out of the water. Why did this happen? Where was this withdrawal mass coming from?
I think the problem is that you've seen over the last few years, a lot of investors in this low yield environment that we've been in have been reaching for extra yield by going into credit funds where normally they might have owned cash instead, but because the yield available on cash was so low, they thought, well, I'll take a bit more risk, I'll own some investment grade credit. And it was, I think, understood by most that the background was that non-financial corporate debt to GDP levels had risen to pretty elevated levels. But people thought, well, with this low interest rate environment, what's going to be the shock to revenues, which means that those investment grade companies struggle to pay back the debt. Obviously, the shock comes in the form of the COVID-19 outbreak and the shutdowns to economies around the world which are taking place, and therefore the revenue hit to many of those businesses, which will mean that interest coverage ratios come down, leverage ratios go up as the EBIT declines, and hence you get downgrades. And as a result of that, I think you're seeing many people try to get out of those credits before they get downgraded, which is leading to spread widening. But once the downgrades actually come through, there will be, I think, another wave of forced selling.
And Mike, I don't see how this issue fades anytime soon. I think this is the key issue right now. We spent about 2 months debating scope and severity of this health crisis. How bad would it get? How wide would it spread? And now there's a huge uncertainty over longevity. How long will it last? And the longer it lasts, the stronger, the more fuel the argument there is for the idea that essentially defaults start to pick up and we go through this massive wave of deleveraging and we're going to have tough times in credit. Mike, how long do you think things are going to take to clear with that in mind? Because I keep hearing people say it depends how long this goes on for. What does how long mean?
Well, yeah, look, obviously that's the big question that no one knows the answer to and everyone wants to know the answer to, and I'm afraid I don't have the answer. But I think that, as I say, it takes a while for the downgrades to come through historically. The rating agencies don't tend to just downgrade a whole bunch of companies overnight. So I think that will be a rolling process. In terms of the economic impact, what's really needed here to prevent companies from really struggling is for governments to step in and pay the wage bill for large and small corporates across the economy in this period where many companies are seeing very dramatic declines in revenues. If you look, for example, at the open table data on restaurant bookings, you're seeing a dramatic decline in bookings and hence revenues for some of those kind of companies which are most exposed to this. So are we going to see that kind of massive fiscal stimulus that is required to really allow companies to keep workers without firing them? Because if not, then job losses are going to rise, and in that scenario, that could spill through and worsen and lengthen the downturn, and hence the problems in credit.
And Mike, I think that a lot of politicians are very aware of this, which is why we've seen an incredible speed to respond to this and a number of bills trying to do exactly what you're saying, although the details vary from day to day depending on which phase of the bill we're in. But I'm wondering at what point you step in and buy, at what point you say, all right, we've gone far enough.
I think that ultimately depends on your time horizon. So when you look, for example, at high yield credit at the moment, spreads have widened out a long way. Partly that is because you've seen energy spreads widen out so far. So excluding energy spreads, you still have seen material widening, but not quite to the extent that it looks like if you just look at the headline index, because the energy component is stretching that. But nevertheless, with spreads as wide as they are at the moment, if you buy at these kind of levels, historically, on a 2 to 3 year view, you make pretty good money. Some companies will default, but there's a fair amount of default already priced in. That said, it's possible that spreads could widen quite a bit further in the near term before things get better. So if you look, as of last night, US high yield spreads were approaching 10%. In 2008, they got as wide as close to 17%. So things could get worse before they get better. So if you can take a 2 to 3 year time horizon, it's probably quite attractive to buy. If you've got a shorter term time horizon than that, and you're worried that things could get worse before then, and you probably want to wait off and hold off a bit.
Hey, Mike, great to catch up with you. Mike Bow there, JP Morgan Asset Management Global Market Strategist. And Mike is right, we were pushing 20% in terms of high yield spread back in late 08 going into 09, and we're just short of 10 right now. But it's the pace, Lisa. We've gone from the tights of the year around 315, 316. We've trebled that. We've trebled that. The bulk of the move has been in a single month.
Just to give you a sense, distressed levels on high yield are 10 percentage points over benchmark rates. We are less than 25 basis points on average for the entire index for that after being near record low yields not that long ago.
With energy high yield spreads at record wides as well. Something we can talk about a little bit later this hour. Let's get you some news, some headlines worldwide. Here in New York City, let's say good morning to Michael Barr. Good morning, Michael.
Good morning, John. Good morning, Lisa. The coronavirus has claimed 235 lives in Spain over the past 24 hours. The health ministry official says the Spanish outbreak raised the total death toll by 31% to 1,002. Wuhan, China, where the outbreak began, offered a ray of hope with no new infections reported for a second day in a row and only 39 cases reported nationwide. The U.S. has warned Americans to avoid all international travel and told citizens abroad to return now or face an indefinite absence. California's governor is ordering all 40 million residents in the state to stay home. In New York City, the Metropolitan Transportation Authority says that 23 workers have tested positive for the coronavirus. President Trump is trying to calm Americans about the virus, but there is some confusion about the government's progress suppressing the COVID-19 outbreak. Bloomberg's Martin DeCarroll reports on the president's comments about the use of a decades-old malaria drug.
It sounded like a breakthrough.
He got it approved very quickly. I won't even tell you how quickly, but let's put it this way, it's approved.
President Trump from the White House briefing room announced the malaria drug chloroquine was FDA approved for use on COVID-19 patients, only to have the agency say a short time later it was not approved for coronavirus. It is being tested. Dr. William Schaffner is an advisor to the Centers for Disease Control.
And there are plenty of patients in whom we can do clinical trials and get solid information.
Right now, chloroquine is only permitted for use in severe cases that are not responding to other treatments. In Washington, Martin DeCarroll, Bloomberg Radio.
Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John, Lisa?
Michael Barr, thank you, sir. From New York City, you're listening to Bloomberg Surveillance. We are live on Bloomberg Radio.
Message and data rate may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Hey y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Influential conversations from
The Puck Drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Bloomberg Television. Here's Emily Chang.
Continuing our look now at the fallout from the coronavirus outbreak, I'm joined now by Dick Costolo, the former CEO of Twitter, also managing partner of the new venture capital firm 01 Advisors. Dick, thank you so much for joining us. I got to get your thoughts, first of all, on the big picture here. Markets are melting down. There is no end in sight. What's your view on all of this and what it means for the tech economy?
My personal take on this is that in the past, in 2001 and in 2008, 2009, those were both great buying opportunities. I mean, you never know where the bottom is going to be and you never know when it's going to end. But a couple of years from now, we'll look back and wish we've been buying more when prices were where they are. So I've been a buyer slowly but surely all along the last week and probably will continue to do that.
You and your former colleague, Adam Bain from Twitter, recently launched a venture capital firm, 01 Advisors. What's the status of that? And, are you trying to raise funding? Are you able to raise funding?
Yeah, the funds raised, fortunately, and that's great. We're continuing to put money to work and continuing to invest. And I'm then obviously advising operators and CEOs in this environment to, you don't know how long it's going to last. Take it very, very seriously.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and U.S. stock index futures are climbing along with stocks and bonds globally as investors review the unprecedented government measures to shield jobs and economies from the accelerating coronavirus pandemic. The dollar halting an 8-day rally, and we check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up 44 points this morning. Dow futures up 460. NASDAQ futures up 231. The DAX in Germany is is up 4.2%. 10-year Treasury up 1 9/30 seconds, yield 1.00%. The yield on the 2-year 0.38%, and the 30-year yield 1.63%. NYMEX crude oil up 1.5% or 38 cents at $25.60 a barrel. COMEX gold is up 1.8% or $26.60 at $15.0590 an ounce. The euro is at 1.0732 against the dollar. British pound 1.1772, and the yen is at 109.98. Checking the VIX, 68.21 is where it's at, and that's a Bloomberg Business Flash. John and Lisa.
Karen, thank you very much. Pop quiz: when was the last time we had some back-to-back gains on the S&P 500? And dare I say we might get one today. You have to go all the way back to the middle of February when we had a 3-day gain on Monday, Tuesday, Wednesday, the 10th, the 11th, and the 12th.
I actually got it right. You asked me.
I asked you in a commercial break, and you nailed it. You said early Feb. It's the middle of Feb, but I'll let it slide. It was a decent guess.
February.
Congratulations.
15th. Thank you.
No, honestly, it's been remarkable, the fact we've been back and forth. And if you think of equities have been volatile, check out everything else. Crude this week, Wednesday, we had a drop of 24%. Thursday, we had a rally of 24%. And finally, things have quietened down just a little bit, which means that Francisco Blanch gets to take a deep breath and give us some of his time on this program. Bank of America Global Head of Commodities and Derivatives Research. Francisco, I have one question that's been on my mind through the week. How close are we to breaching storage capacity in some of these big producers, some of these countries around the world?
Hey, Jonathan, thanks for having me. I think there's a risk we get there within the next couple months. But remember, the hardest part of this crisis is that we don't know how much of a demand drop we're going to experience in the second quarter. We are talking about a 12% GDP contraction in the U.S. ourselves, but I've seen all kinds of estimates. Some people call them guesstimates, and I think it's a good word because the demand contraction will ultimately determine the supply-demand imbalance, because we know where supply is, more or less. We know that Saudi Arabia is having an extra couple million barrels a day during the price war. The Russians are going to put some more oil on the market, and we've seen Abu Dhabi also increasing their production estimates for April by 1 million barrels a day. So we have a pretty clear picture of the supply side. We just really are having a hard time determining how much of the demand contraction we'll get. Remember, we have 100 million barrel a day market in oil. So every percentage point of GDP, can be easily translated into some kind of demand contraction here. So to answer your question, it's very difficult to say, but it could happen within the next 2 to 4 months if production volumes stay at these levels.
Francisco, when we talk about the oil market, you have on one side the complete fall off in demand with the result of the shutdowns stemming from the coronavirus. And then you have the tiff between Saudi Arabia and Russia, where you have an acceleration of production. The implication from what you were saying is that the Russia-Saudi Arabia issue has basically already been factored in. We already have a sense of that side of the equation, even if there is a possibility of them coming to some agreement. Is that accurate?
Yeah, I think we've had we factor in for sure the price war between Russia and Saudi Arabia. What we haven't been able to factor in is how much of a demand collapse the world's going to experience. Yesterday, we heard the news on California shutting down, similar to Spain and Italy. But we're going to hear more of this news, I think, over the next few weeks. And ultimately, remember, everyone is kind of shooting for a V-shaped recovery into the third quarter. But it's not clear that's going to happen either, because once we have there's two things that really make it difficult on the demand side. One is the initial demand contraction rate, and we don't know what that's going to look like. Then the second thing that makes it very hard to determine this is how long this is going to last. Because remember, if the world goes into lockdown for, let's say, a month, we are going to be able to get rid of this virus. But if we get lockdowns, partial lockdowns, one in California, and 3 weeks later in New York, a week later in somewhere else, and a week later in Canada, the virus will keep rolling from place to place to place. So it's very hard to say when we'll be able to come back to a normal economy. I think that's what we are really struggling with.
Well, let's talk about what could happen to crude prices, Francisco, because I agree with you. The big unknown right now is longevity, and unless you can get your hands around longevity, you've got no idea how to model anything at the moment. Jeff Curry came on this show from Goldman, a peer of yours, and I'm sure perhaps a friend as well, talking about what would happen with crude and the characteristics of commodities as an asset class and how they differ to, say, equities. Equities an anticipatory asset class, and in commodities, you've got a clear demand and supply at spot. Now, if you're talking about storage capacity being breached in a couple of months, help me understand how price responds in that environment. Is that just a sudden drop from 20 down towards 1? What does that look like?
Yeah, so essentially, we've seen it in natural gas, for instance, in the Permian Basin. Natural gas is a very good example. Now, it's a bit more extreme than oil, right? But it's a more volatile commodity. It's a lot harder to store. It's harder to store a gas than a liquid or a solid item, right? But in the case of gas, we saw prices go negative last year in the Permian Basin because we produced all this gas that was associated to shale oil production, didn't have any value. Prices went negative. Eventually, we shut down pretty much all the gas production we could. Eventually, we built pipelines to transport it to market centers. So this is the kind of commodity behavior you can have occasionally. Now, I don't think that Saudi Arabia and Russia are going to be paying us to drive, Jonathan. So I don't think we need to worry too much about that. But I do believe that Saudi Arabia and Russia, when they went into a price war a few days ago, they were prepared for a price meltdown. They had to be, right? I mean, when you increase production in the midst of what's looking to be one of the worst demand crises ever, you have to be prepared for prices to drop into the 20s. So it's not clear to me we're going to have a truce tomorrow here. I think maybe we have it within 3 months. So it's going to be a supporting factor for the market for sure once that happens. But prices will keep dropping on a spot basis, and forward prices will hold up, which is what will encourage the storage until you cannot store it anymore. And that's when the prices really fall off a cliff, and that's the situation I think Saudi Arabia and Russia will try to avoid at all costs, in my opinion.
Really smart stuff, Francisco. Appreciate your time, and my best to the team over at Bank of America as well. Francisco Blanche there, Bank of America Global Head of Commodities and Derivatives Research. Lisa?
The reason why I was curious about the demand side versus the tiff over in the Middle East is because President Trump single-handedly boosted oil prices yesterday by saying we have a lot of power over the situation. We're trying to find some kind of medium ground, saying that he was going to get involved. I just wonder how much that matters.
Well, it contributed to a monster rally in yesterday's session, but we've been all over the place in this asset class. Crude this morning is up by 1.6% on WTI. We have a 25 handle. From New York, this is Bloomberg Surveillance. We are live on Bloomberg Radio.
"25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically. Yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/seize change.
This is a Bloomberg Money Minute. Tiffany today reports.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We are live on Bloomberg Radio, where equity futures roll over just a little bit. Still up by 1 percentage point, but the direction of travel is not encouraging. The highs at a session up on the S&P 500 by 4.6%. The lows down 2.46%. A headline dropping across the Bloomberg terminal coming from a committee of UK advisors, I believe to the government, saying that social distancing could be needed for most of this year. Social distancing could be needed for most of this year. This is the news coming out of the United Kingdom. Now, we have very little idea of how long the containment and mitigation efforts will go on for. We've got the example of China. We have the experience of Italy to lean on a little bit. But if companies are suspending guidance, if we have pretty much no visibility for revenue streams through the next 12 months or so, Lisa, how do you model any kind of forecast or anything through the next 12 months?
And this has been the conundrum for a lot of economists and investors, is that there is no compass and there is no sense of how long this will go on for. But this headline, I'm really struck by. What does social distancing mean? I mean, does that mean that the shutdowns that we're seeing where people are basically told to shelter in place will continue? Does it include bans on certain bars or restaurants or other types of things? I mean, these are all really important questions to model out the economic damage. But frankly, the fact that this is global means that the shocks are going to reverberate for a very long time.
Well, you're right to try and understand what social distancing actually means, because shelter in place, of course, is the extreme version of social distancing. And I have no idea if this particular headline implies that. But beneath this particular headline, underpinning it, is the unknown, the question that we can't answer at the moment, which is how long the containment and mitigation efforts need to go along for. Do they need to go through the summer? Do they need to go through year end? We'll do our best on a program like this, not to provide you guesses from people like me. I'm not going to be stupid and do that. We'll lean on the public health officials to get their best guess as to where this is heading. But right now, that one question and that unknown underpins a lot of concern for global markets and for economists trying to look ahead through the next 12 months. We'll bring that question now to Chris Rupke, MUFG Union Bank Chief Financial Economist. He joins us on the phone. Chris, I'll ask you a question that I basically asked an analyst earlier this week. It was Dan Ives of Wedbush, and he took it brilliantly. It's no insult to the Southside community whatsoever. I'm just trying to understand what the point of providing any kind of forecast is right now when we have no idea where this is going.
Well, because everyone still wants to know what's the direction of prices. We're all kind of stuck here with the forecast. The most leading of leading indicators here is the stock market, unfortunately, at this stage. So we're just kind of following the bouncing ball up and down. Certainly when the Dow Industrial Stock averages fell 36% from the high to low this year, earlier this week, 36%, I think, discounts quite a bit of fundamental weakness in the American economy. So maybe we're going to be all right. And as far as the UK virus committee, I found some optimism there, because they also said that there would be that large scale rioting was unlikely in the UK. That was comforting.
Well, we take our comfort where we can get it, clearly, because if that's comforting, clearly our bar has been lowered to a pretty big degree. Although to be fair, we are not seeing a big move in sterling off the back of that. So still seeing a little bit of sterling strength versus the dollar. Although I don't know again how much comfort we can take from any of the moves we've been seeing recently, Chris. So not to talk about the unknown, but let's talk about the known, and that is that the assumption right now is a recession. That is the base case assumption, both in the U.S. and globally. I'm wondering what sort of tips the scales from recession to depression. How do you sort of look at that?
Well, I guess, the Great Depression, unemployment, it was measured differently back then, but I guess we more or less agree that it was about 25% unemployment in the country. A quarter of your neighbors out of work. That was pretty bad. So in the Great Recession we had 12 years ago, the unemployment rate got to 10%. So if we get, so we're probably not going to go into a depression. But who knows? This unemployment could go very, very high. Anyway, if we go back to 10% unemployment again, it essentially means that the 6 million people out of work today that are unemployed, that's going to rise to 16 million out of work in the country. So we're going to see an increase of 10 million in unemployment if we hit a 10% unemployment rate due to this coronavirus slowdown. It is the quickest downturn I've ever seen in my career.
Chris, we have Goldman Sachs coming out and forecasting that the people applying for unemployment benefits could climb to 2.2 million, which would be a record increase. Do you agree with that estimate?
Well, I guess it just depends on who you apply for unemployment compensation, and then they tell you whether or not you're able to get the benefits if you qualify. I would just take it, since it's so unknown at this point, the Restaurant Association, I believe the other day, estimated 5 to 7 million restaurant workers would become unemployed, and there's about 12 million people who work at bars and restaurants in the country. Just take it like 5 million of those restaurant workers out of work. That pushes the unemployment rate from 3.5% to 6.5% right there. So that's your recession, of course.
Hey, Chris, great to get your views. Some somber views as well. Chris Rupke there of MUFG Bank, Chief Financial Economist. Looking ahead, some data coming out next week. We will get on March 24th a preliminary read on the PMIs out of the United States. If you want a decent idea of where the estimates are right now, for manufacturing it's at 45.0. For services it's at 44.0. And I imagine the range of estimates is all over the place, and it is. For manufacturing, the low estimate is 35. The high is 49.5, and the range of estimates for services at this point is 35, and the high is 48.8. So huge range of estimates. And I always find the range of estimates just has quite a simple picture, a very, very simple interpretation of that. Totally unknown. No one knows. Absolutely clueless at this point how much damage is being done to the economy. We have a decent read coming from things like initial jobless claims, Lisa. We talked about that at the state level, that things are picking up quite fast. But when you slam the brakes on the economy, when you shut the doors in California, I imagine the damage done to the economy is immense.
Well, and the psychological impact, and not to sort of overstate this, but the idea that people feel like they could just have the floor ripped out from under them, and all of a sudden they have no job and no prospect for a job, and what that does going forward to spending patterns, how long that takes for things to get off the ground. Also, since this is global, at what point does demand from overseas also bleed into the job opportunities that individuals have? So all of these unknowns magnify one another, and that's the reason why you're seeing such an incredible range of estimates right now.
Yeah, I caught up with Stuart Kaiser of UBS recently, and we talked about the sequencing of the monetary policy effort. Now, in the immediate term, what they've got to try and do is unlock some of the stress, the tension, and some of the liquidity issues. Now, maybe they can do that with some of the tools they've introduced over the last week or so, the last 2 weeks for that matter. Then the next step is to try and put a floor in financial conditions to try and support credit. And that's going to be a difficult task to do as we work our way through this particular health crisis, as credit risk continues to linger big time. And it's only when really that the economy starts to open again, as we come out the other side of the mitigation and containment story, that the stimulus that they've put in the economy starts to kick in a big way, because that's when you start to support activity with lower rates and cheaper funding. When things are shut down, it's not going to move the dial much, is it?
Without a doubt, not with lowering rates and buying government bonds. There is a proposal, and a number of people have mentioned this, that the Federal Reserve should buy corporate bonds, corporate debt, the way that the ECB and Bank of Japan have done. I have struggled personally with whether this would actually help the situation or whether it would end up with similar distortions akin to what we've seen in Europe without materially helping the situation at hand. And I don't know the answer to that.
Well, you know the story, and it continues. The recipe to address the last crisis, usually the seeds to sow the next one. And what we're seeing on the liquidity side of things, Lisa, arguably for most people in fixed income, stems from how the last crisis was addressed.
That's exactly what I was going to. And you're seeing this in a more egregious way over in Europe now as people try to understand the credit risk that was dampened for so long by the ECB, because at the end of the day, they can suppress bond prices, but they can't prevent a company from going belly up if their revenues completely dry up. So I just don't understand how that provides money in real time to companies when investors have no way of pricing the real risk there when we have such unknowns looming in the economy.
Ongoing story. Let's get you some news, some headlines worldwide. We can do that from New York with Michael Barr. Good morning, Michael.
Good morning, John. Good morning, Lisa. California Governor Gavin Newsom ordered that all of the state's 40 million residents go into home isolation, marking the most stringent U.S. effort yet to stymie the spread of the novel coronavirus. During a news conference, Newsom said this is a moment where we need some straight talk.
If we're to be criticized at this moment, let us be criticized for taking this moment seriously. Let us be criticized for going full force and meeting this virus head on.
The shelter-in-place order vastly expands mandates put in place earlier this week across the San Francisco Bay Area. It allows people in California to leave their homes for needed items like groceries and medicine, while otherwise requiring that they limit their social interactions. Businesses not deemed essential will be shut. One of the most precious items needed during this outbreak, ventilators. However, Vice President Mike Pence, who heads up the White House Coronavirus Task Force, says more ventilators will be on the way.
We're encouraged to learn that we've literally identified tens of thousands of ventilators that can be converted to treat patients. And we remain increasingly confident that we will have the ventilators that we need as the coronavirus makes its way across America.
Lawmakers are working on a plan to lessen the economy's impact from the virus as millions of businesses, schools, and services have been forced to shut their doors for safety. Senate Republicans and the White House, they're introducing their $1 trillion plan to boost the economy, which would include checks sent directly to Americans. If you make $75,000 or less, you'll get a check for $1,200. Anyone making up to $99,000 will get a smaller check, and families with household incomes under $198,000 will get up to $500 per child. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John, Lisa.
Michael Barr, thank you, sir. And just add to a little bit more of what Michael Barr was talking about that with the $1,200 checks. My understanding, Lisa, is that for every $100 you are over the $75,000, you get $5 less on that particular check you receive. So if anyone wants to do the math on their position right now, if any listeners are out there at the moment, my understanding is the bill they're trying to put through, 75,000 or less, to Michael Barr's point, you get 1,200 for an individual, all the way up to 99,000 when it gets phased out completely. But for every 100 over the 75K, subtract $5 off for the check you will receive.
That's definitely a new math equation to do. I'm just struggling to understand how long $1,000 or $1,200 is going to sustain somebody. And I mean, that's what I'm thinking about right now.
I think most people would think that this is the beginning, the first step, and a lot more is going to need to be done.
And I think that the reality is that Congress is aware that they have to move quickly, and they just want to get money out to sustain people in the meantime while they figure out a longer-term solution. The solution that I've heard is really getting money to small and medium-sized businesses so that they can keep people employed in order to avoid the mass layoffs to begin with. And I think that really is the key focus at this point.
2 Fridays ago was Payrolls Friday. I know it feels like a lifetime ago. And I caught up with Larry Kudlow, National Economic Council Director, and he said, we're not looking at some big plan that throws $1,000 checks at Americans, and here we are 2 weeks later.
He was right.
Talking about $1,200 checks. But the reason I say that is not to insult anyone in the administration. It's just to highlight how quickly this story is moving for policymakers. And week after week, the story they look at, they need to do more and more.
And frankly, initially, there was a more blasé approach to the whole thing. It sort of took a while, at least a week, which in this moving environment, that's a lifetime, as you said.
Equity futures right now up by 1.37% from New York City alongside Lisa Brown.
Bloomberg Real Estate Report. I'm Denise Pellegrini. One well-known real estate investor says the impact of the coronavirus is terrible, but will probably be temporary.
You know, real estate in general is a slow process to adjust to conditions, but you know, we're facing World War III for 90 days. It's not World War III for 5 years or World War III for 10 years.
Barry Sternlicht, Chairman and Chief Executive Officer at Starwood Capital Group Management, says it's actually a good time for some companies in the real estate business.
We have incredibly low rates in the United States now, both for the consumer, for his mortgage payments, and for businesses, for their loan payments. You know, $100 million, you borrow $100 million, you owe $2 million a year. Most businesses can cover that or come out of pocket to cover that. So you have low rates, you have unbelievably low commodity prices. Commodity prices are the lowest they've been since the 70s. You have massive stimulus.
Sternlicht does say some restaurant and retail businesses will suffer a lot before it's all over. And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Connecting decision makers to a network of news and financial information 24 hours a day. Powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Radio. Now, a global news update.
Special report, coronavirus update. The U.S. State Department has warned Americans to avoid all international travel and told citizens abroad to return now or face an indefinite absence. Dr. Anthony Fauci is on the White House Coronavirus Task Force and gives a dim view of a coronavirus anti-drug.
Fauci is trying to tamp down expectations that drugs currently approved for other illnesses will be the end of coronavirus.
There's no magic drug out there right now.
The FDA is moving ahead with permissions for testing a variety of drugs already approved here or in other countries or close to being approved for other diseases. Bob Costantini, Washington.
California Governor Gavin Newsom ordered the state's nearly 40 million residents to stay at home. The order, the first of its kind to address an entire state, will last until further notice. On Wall Street, Dow futures are up 2.25%. I'm John Trout.
They don't just talk to the most important people.
Is it as ominous this time around?
They talk with the most interesting people.
Are they taking this seriously?
Bloomberg Markets, weekday mornings at 10 Eastern on Bloomberg Radio. Bloomberg, the world is listening. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. And U.S. stock index futures are climbing this morning, along with stocks and bonds globally, as investors study the unprecedented government measures to shield jobs and economies from the accelerating coronavirus pandemic. The dollar halting an 8-day rally. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up 25 points this morning. Dow futures up 274. NASDAQ futures up 191. The DAX in Germany's up 3.9%. CAC in Paris up 4.7%. And the FTSE 100 up 1.6%. 10-year Treasury up 1 9/32. The yield 1.00%. Yield on the 2-year 0.37%. And the 30-year yield 1.62%. NYMEX crude oil down 1.2% on 30 cents at $24.92 a barrel. COMEX gold is up 1 1/3% or $19.70 at $14.99 an ounce. The euro 1.0746 against the dollar. British pound 1.1804. And the yen is at 110.15. The VIX at 68.66. That's a Bloomberg Business Flash. Lisa.
Thank you so much, Karen. And possibly what we are seeing today, as we do get a little bit more stability, is the effect of liquidity being pumped into markets by central banks around the world. We've had the Federal Reserve come out with their fastest response ever. Same with the European Central Bank. Same with the Bank of England, Bank of Japan. Everyone coming out with their fire hoses in order to ameliorate some of the incredible liquidity crunches that we have seen around the globe. Luke Hawa tracking this all, cross-asset reporter for us here at Bloomberg. And Luke, I'm trying to sort of glean some comfort, because it's been a very tough period of time for everybody and not a lot of places of comfort, but at least comfort in the fact that we are seeing the dollar weaken a little bit today. We are seeing gold gain. We are seeing bonds gain. We're seeing traditional relationships of people looking for havens and finding them in some of these asset classes. Is this the result of central bank liquidity finally working?
That also just might be the result of finally people getting done with the cleansing process. Like, if central banks are doing everything they can, but at the same time, the desire or the need to sell is just so immense, whether it's to, save funds to fight another day, or because clients are essentially demanding you do that, then, the programs aren't going to matter in that kind of backdrop. However, there's going to be kind of a race, I think, or at least a very big appetite to call bottoms and pick bottoms here. But I will say that yesterday had something very constructive about the price action in equities, even though it wasn't one of the kind of limit up days we had. We had the New York, the NY FANG index, which is FANG plus some more tech giants. And then also you had the most shorted stocks, the golden basket. You had those outperform by about 5 percentage points on the day. That's never happened before. So we had a situation where people were buying the stuff that had worked before, the stuff that they love, and at the same time, you had a situation where people were saying, okay, all those shorts, all those things I hated, time to close up, time to do something else.
Luke, there's a question here that I have that's sort of underscored by your point here, that people are getting a little more constructive on markets, just as you get an increasingly dire picture of the U.S. economy and the global economy, for that matter, as an increasing number of places shut down. California, the latest, to say that there was going to be a statewide shutdown, basically shuttering the biggest economy in the nation, or one of the biggest economies in the nation. I'm just trying to understand how you can reconcile the sort of deteriorating view on the economic side and the increasingly constructive view on the market side.
Well, I think that's markets have to be forward-looking to a certain extent, right? And if you look at where the U.S. Economic Surprise Index was when we were descending into our fastest bear market in history, it's holding up quite well, doing quite well, just that the data didn't matter because everybody knew things like this were coming. I've actually talked to some strategists over the past few weeks and months that have said you need in U.S. economic activity, you need the leg down to be very sharp for me to get constructive, because that raises the chance that this is something that passes sooner, even though it's more severe. So that could be something taking cues from there, but it's fairly likely, if you look at just the history of recessions or whatnot, that you're going to see markets bottom before the economy actually does. But you'll probably see volatility peak long before the market bottom. So that's kind of the process we're working our way through at this juncture.
Do we have a sense of the leveraged funds, the sort of computer-driven strategies that a lot of people were talking about as driving a whole host of the volatility in the past couple of weeks? Do we have a sense of whether that washout is getting close to done, or at least closer?
I mean, it's difficult to tell. Talk to any strategist, you'll get a different opinion. David Zerwas at Jefferies, for instance, kind of mentioned that he thinks, the risk parity associated deleveragings will be in the trillions, not the hundreds of billions. So to get an Eric Schatzker quote on that. On the other hand, Charlie McElligott at Nomura has suggested that risk parity funds went from gross leverage of about 550% to less than 250% in basically a month's time, and that is probably very much resembles something a clean out for that group.
Can you give us a sense just of the range of the views and the estimates that you're hearing from people? I mean, has it ever been less coherent in terms of a consensus?
Oh, completely. It's to the point where people are very, very wary of even giving an estimate whatsoever. You see this, like some sell-side analysts, for instance, on single stock or on the S&P 500 have just, completely torn their price target asunder. They've just completely withdrawn it, whether it be for a stock or for the index. Making kind of calls in this environment is incredibly difficult, especially when it all seems predicated on a policy response that for a long time has been coming into view, but has been very, very uncertain. Wall Street doesn't do two things well, for sure, and one is politics, and the other is kind of medical forecasting. So put the two together, and here's what we have.
Yeah, indeed, record volatility. How's it going working from home?
I've got some great company here, so it could be a heck of a lot worse. I will be happy to be seeing the light of day a little more and getting back into 731 Lex.
Honestly, there was a fantastic post on Twitter, somebody posting their commute on post-coronavirus world, and it was basically a map that looked like a subway map, and it was saying, from bed to kitchen to yoga mat. And I guess that is people's reality at this point, isn't it?
Yeah, I think, mine's pretty much a dot, so they must have a bigger apartment than that.
Luke Kawa, thank you so much for being with me today. Luke Kawa is a Bloomberg Cross Asset reporter. Speaking about the incredible volatility, a bit of a breather this morning. We did have the NASDAQ futures limit up earlier in the trading session, a little off that at this point, but still solidly in the green as people reassess some of the central bank efforts, currently up 2.4%. You're seeing the S&P futures and Dow futures also up. S&P futures now trading, if it holds, would open at 2410 points. So we are looking at a little bit more of a constructive view, and perhaps underpinning this is the strength that we're seeing in longer term bonds. The idea that you're having yields drop after rising during a tumultuous period of people selling what they can, fire sales of any assets that possibly could retain their value. Coming up here on the program, Paul Sweeney joining as we dig further into all of the market volatility. I'm Lisa Abramowitz. This is Bloomberg Surveillance.
Imagine.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Leave it to the New York Times to make the most intelligent pop music podcast out there.
Welcome to the New York Times Popcast.
On the Popcast, the Times music staff gets together for a weekly roundtable on the hottest topics in popular music. From award show autopsies and reactions to new releases to difficult-to-process scandals and emerging themes in the music landscape, hear distinguished music critics share their perspectives on the latest music news, songs, albums, and artists of note on the New York Times Popcast. Search and favorite Popcast to join the conversation.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong. Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, HUD.gov/fair housing. That's HUD.gov/fair housing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE, SIPC.
This is a Bloomberg Money Minute. Futures point to a second day of gains on Wall Street. Dow futures up 452 points as investors review the government measures to shield jobs and economies from the coronavirus pandemic. Yesterday, the S&P 500 gained about 0.5%. Crude oil continues to climb this morning, up about 1.5%, almost back to $26 a barrel. Walmart is hiring 150,000 temporary workers to meet surging demand for everyday goods. Many will become permanent staff over time. Separately, Walmart is preparing to start coronavirus tests in store parking lots this weekend. These tests will primarily be for healthcare workers and first responders. And Hertz, Avis Budget, and Enterprise are asking the Treasury Department to include the rental car industry in federal plans to rescue U.S. travel companies hit by the coronavirus fallout. The three warn they'd sustain grave harm as airlines pare back service. Gina Cervetti, Bloomberg Radio.
Market upheavals.
The narrative is driven by uncertainty about the virus.
Political reversals.
It's not clear that some of the Republicans up on the Hill are agreed with the Republican White House.
Economic shifts.
The macro clearly being driven by the coronavirus outbreak.
Everything seems to be in motion.
Will it also mean a global recession in your view now?
But here, you're on solid ground.
Looking forward to guiding you through all of this.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. We have to get it right the first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
Once we get through coronavirus, it's very supportive and very stimulative.
Central banks themselves got caught hostage by markets.
Finance.
OPEC Plus is at war with itself.
We know we can create America's energy independence again.
Investment.
The market's anticipating the rate getting very close to zero in fairly short order.
Volatility is back, so that's going to make for more cautious trading.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good Friday morning from New York City and points beyond to our worldwide audience. I'm Paul Sweeney alongside Lisa Abramowitz. Tom Keene is off today. He'll be back Monday, back on surveillance. As the coronavirus continues to spread globally, the markets are trying to find a floor, however temporary that may be. Equity futures are in the green this morning after a positive day yesterday. Treasury yields once again are coming in as the dollar pulls back from its recent strength. Crude oil is steady after days of volatile trading. And, Lisa, for our Boston and Tampa Bay listeners, it is official. Tom Brady is now a Buccaneer. I know you were waiting for that. So, Lisa, this morning we're getting
hold on a second. He wasn't just sheltering in place with Giselle. Is that the idea?
That's the idea. So it looked like he's going to relocate to warmer climates down in Tampa Bay. So our for our good friends up in Boston. The end of an era, I guess you could say.
Absolutely.
So again, Lisa, so I know I've been listening to you and John this morning, a little bit of stability here in the marketplace. We have some green on the equity futures, maybe confirming a little bit, at least temporarily, some of the price action we saw yesterday.
Yeah, I think that the story today is certainly a better liquidity backdrop. I mean, that at least is the implication from the Treasury market, where you're seeing a bit into the long end for the first time. That's consistent. The idea being here that the Fed coming in and buying a lot of Treasuries and other assets is actually helping provide a floor to valuations and give people confidence that if they need to raise money, they can. And you're also seeing gold prices climb, which also indicates something to that degree. To me, I'm just wondering what they're looking at just beyond that in terms of the forward-looking guidance as far as when his earnings will pick back up, given the fact that economic forecasts are all over the place and the story is fast-moving and unknown because it really is a medical one. And Dave Wilson, Bloomberg stocks editor, has been covering it all, and he joins us here in our Interactive Broker studios. Dave, do you have a sense of what's driving the more constructive feel to markets ahead of the open here?
Well, you started out yesterday with people willing to step in and buy shares of the smaller companies. I mean, we talked about the Russell 2000 index. You look at how it did yesterday, up 6.8%. So, heck of a recovery there. And it's really kind of spreading out, it would appear, as much as anything, to the larger companies in the S&P 500. So bear in mind, though, S&P 500 hasn't had back-to-back daily gains since February 12th, and that was a week before it reached its record high. You had a 0.5% advance in the S&P 500 yesterday. Not much compared with the Russell. Nonetheless, it rose, and looks like it's heading higher today. I mean, the airlines. You've got Senate Republicans proposing that airlines receive $58 billion in loans and loan guarantees to cope with the coronavirus. The amount matched a request made by an industry trade group, though the airlines wanted half the aid to come through grants. Nonetheless, you see these stocks rising in early trading. American's up 3%, Delta's up 10%, Southwest up 5.5%, and United up 9.5%. And then you turn to the cruise lines. Carnival came out with preliminary results for the fiscal first quarter. And if you take out the effects of the coronavirus and look at adjusted earnings...
How can you do that? Come on.
Well,
sorry.
That's true.
Come on.
You can at this point. And they do acknowledge as much. But if you look at the adjusted earnings, they beat analyst average estimate in the Bloomberg survey.
Revenue
God.
did too. No.
They did have a net loss for the quarter. They wrote down the value of some assets. They said the coronavirus hurt the results by 23 cents a share.
I reject that. I reject the idea that companies can come out and say, you know what, we're going to treat this like the weather and say, you know what, because of weather, we can strip out this, that, and the other. And I think that investors are going to reject that too.
Carnival's up 13%. So there you go.
Yeah, off of what? After how big of the losses have they been?
Well, I mean, you've got that working in your favor, I suppose. But Royal Caribbean's up 10%. Norwegian's up 11.5%. Carnival's down 80%, though. I mean, there is a recovery going on, in a sense, in the stock. Nonetheless, I mean, if you look at the basic business, at least it was okay. Then you turn to the car rental companies. Hertz Global Holdings up 20.5%. Avis Budget up 15%. They're higher for a second day, and they got together with Enterprise Rent-A-Car's owner and asked the Treasury Department to include them in a travel industry rescue. Heck, even the ride-hailing companies are higher. We had the results out of, we should say results. It's more like Uber giving us yesterday a look at how they see their financial position, even if business really tails off because of the coronavirus. Uber shares up 7.5% in early trading, and Lyft's up 5.5%. And with oil hanging in there after the recovery yesterday, you've got ExxonMobil up 2%, Occidental Petroleum up 2.5%, Halliburton up 9.5%. Got to mention, though, Mylan up 11.5%, and Teva Pharmaceutical up 11%. They're higher for a second day as they step up production of the malaria medicine chloroquine in experimental treatment for COVID-19.
Are you exhausted?
Yes.
It's been a week. Dave Wilson.
It has.
Thank you for bringing it all to us, really, and all of the work that you do. It's always wonderful. And your charts, we'll talk about them later. Dave Wilson, Bloomberg Stocks editor, keeping it real here and watching and tracking all of these tumultuous moves that we have seen, Paul.
Yeah, very much. A little bit of support here in the marketplace today, however temporary that might be. Let's turn our attention to the Sunday talk shows. A lot of ground to cover. It was all politics all the time. Now it's obviously focused on the coronavirus and the attempt to halt it. Margaret Brennan, host of Face the Nation on CBS this Sunday morning television and also on radio in the afternoon. Margaret, thanks so much for joining us. Boy, what do you start with here?
Well, the pandemic and life in America, how much it is going to continue to change. We hope to have someone from the Trump administration give us the forecast on the medical front. But we already know how much this is impacting daily lives and the economy. We will have Gary Cohn, former economic advisor to the president, give us a sense of whether what we see Congress come up with as they work into the weekend on this latest stimulus bill, whether that's enough, where the holes are, and what another package might look like. We'll also have the CEO of FedEx, Fred Smith, join us to talk about keeping those global supply lines open, and Dr. Scott Gottlieb, who's been with us throughout this crisis, the former FDA commissioner, on some of the things that the administration has announced regarding therapeutics, regarding drugs that may or may not actually help fight the virus, and what that timeline looks like, and what Americans should be prepared for in the weeks to come.
So, Margaret, within the Beltway, is there a sense that this first round of stimulus is just that, the first round, that this is likely to require multiple rounds of stimulus to the economy?
Yes, and certainly all the industry lobbying groups are making sure that Mitch McConnell, the Republican leader, and others are getting that message and laying out the projections for what job losses could be, as you're seeing, just as I am. These reports out of Goldman Sachs and Bank of America looking at the jobless rate at least doubling, and growth really moving into negative territory from just where we were a week ago. I mean, the swiftness of this is breathtaking, and unlike in 2008, in the middle of that crisis, it seems like Wall Street's panic is being received in Washington, because they are hearing from so many different sectors of the economy and leaders within that business world that they need some help. They also are acutely aware of what's happening in terms of this need to provide some kind of stimulus to hourly wage workers. So structuring it is where the negotiations are right now, debating that, what it would look like. We'll talk about some of that and give you the latest on Sunday, because we do expect Congress to be working on this through the weekend.
Margaret, it appears pretty clear to most observers that President Trump really had a new view of the coronavirus and the risk associated with the coronavirus just this week. Before it's kind of playing down the severity, but it seems like he pivoted this week. What do you think drove that?
Well, it seems like there was a lot of new information gathered this week that changed a lot of different opinions. Just even if you look at that change from one day to the next, the CDC guidance saying no groups larger than 50 to gather, to the next day saying no groups larger than 10, the White House came out and said. There's been a lot of data that the CDC is seeing, that they are looking at from international reports, that it seems to have made those who are already taking this seriously even more sober. For the president, of course, it's hard to get inside his mind on some of this. But yesterday, when he returned to the White House podium, he did seem back to sort of himself in terms of wanting to have some of these more political arguments in the middle of this. But the day before was very sober about all of it. We'll see what we hear later today. We are expecting to get another White House update on where things stand. But it is hard to say that people aren't taking it seriously at this point. They are seeing in a very real way their lives change dramatically. And clearly the White House is driving some of that in their conversations with state and local leaders and some of the dramatic measures that they've already taken.
Absolutely. Margaret Brennan, thank you so much for joining us. Margaret Brennan, host of Face the Nation. You can see that on the CBS television network this Sunday morning, of course. And you can hear Margaret Brennan this weekend on Bloomberg Radio. Listen to Face the Nation Sunday at 2 p.m. in New York, Washington, D.C., and Bloomberg 106.1 Boston, Newburyport. That's Face the Nation this Sunday at 2 on Bloomberg Radio. Let's get some world and national headlines right now with Michael Barr. Michael.
Thank you very much, Paul. Thank you very much, Lisa. Senate Republicans are putting their imprint on the emergency aid legislation Congress is scrambling to wrap up as the coronavirus pandemic chokes the U.S. economy. Bloomberg's Martin DeCarroll reports.
Senate Majority Leader Mitch McConnell unveiled a package of loans to big and small businesses, corporate tax cuts, and
direct financial help for the American people.
Tax rebate checks of $1,200 to most individuals, $2,400 to most married couples. The GOP plan would also limit a paid leave program passed earlier this week. Democrats are calling for more generous paid leave and more help for workers instead of big business. Treasury Secretary Steven Mnuchin, the administration's chief negotiator, is urging Congress to settle this now so the legislation can be approved Monday. In Washington, Martin DeCarroll, Bloomberg Radio.
Grocery store chains and other retailers are easing the fears of senior citizens over the coronavirus by reserving shopping times exclusively for them. Target, Walmart, Whole Foods, Dollar General, and supermarkets in Europe began dedicating early morning shopping times for older customers this week. The theory is that allowing seniors to shop among smaller crowds could reduce their chances of acquiring the virus and give them first crack at buying hand sanitizer and other products that have been hard to find because of panic shopping. It's from the quarterback's mouth. Tom Brady announced today on Instagram that he is signing with the Tampa Bay Buccaneers. Brady said earlier this week he was leaving the Patriots, where he spent 20 seasons in New England. Brady, who is 42, won 6 Super Bowls. Global news, 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Paul, Lisa.
Michael Barr, thank you so much. We appreciate that. Looking at the futures right here, we get a price action here. We have futures up 1% on the equities, well off of their highs, but still holding on to some gains here. And that's good to see after the strong performance we had in the markets yesterday. So, again, what I think a lot of market participants are looking for is just a little bit of stability here as the market tries to find a floor. S&P futures up 1%, Dow futures up 1.2%. That's 240 Dow points. Puts you at 20,121 on the Dow. NASDAQ also up about 2.4%. So, again, strength across the board. We'll have more for you this morning on Bloomberg Surveillance. This is Bloomberg.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Vattel Shah is Senior Project Engineer at Mott MacDonald, a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology and as an adjunct professor is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities. What are we doing to develop that? What will happen to the city on the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that? So in 10 years, we're actually ready to take on those challenges when we have our first development in the water. NJIT also has been doing a lot of work in self-healing materials, so taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Influential conversations from Bloomberg Television. Here's David Inglis.
Let's bring in the CEO and president of the airline itself, Garuda Indonesia, head Irfan Setyaputra. Obviously, you want to understand how the situation right now is affecting your business. What assumptions are you working with right now on what the financial impact will be, both in revenues and profit for 2020?
As you may know, that Garuda is the national flag carrier, so we are not in the position only talking as a business, but as also a tool of the government. Yeah. So for sure, this corona, the COVID-19 outbreak impact us heavily, especially our international market. As you may know, we are not flying anymore to China mainland, but the most heavy impact for us is actually the closing of Saudi Arabia, where we normally year on year flying more than 500,000 Indonesian for pilgrim activities in Mecca and Medina at Saudi Arabia. By closing that, basically we are also being hit by around 24 flights a week to Saudi Arabia. So this is the two things that's heavily impacted us. The other thing is also impacting us is our flight to Singapore, which normally we have around 10 flights a day, now becoming only 3 flights.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
$17 at $14.96 an ounce. The euro 1.0697 against the dollar. British pound 1.1758, and the yen is at 110.66. The VIX 68.33, and that's a Bloomberg Business Flash. Paul and Lisa.
Karen Moscow, thank you so much. We appreciate that. You know, one of the things investors are trying to parse as they just kind of drink through this fire hose of information that's coming at us day to day is what will be the longer term, intermediate term, and longer term impacts to the U.S. economy from the effects of the coronavirus. Will it be a V-shaped recovery, a U-shaped recovery, an L-shaped, or maybe some other letter that we haven't thought of? To help us get the latest, we welcome Michelle Meyer. She's Bank of America Merrill Lynch, head of U.S. economics. She joins us today. Michelle, thanks so much for joining Lisa and myself. So what's your thinking right now as to maybe the next couple of quarters of U.S. economic productivity going forward?
Sure. Hi, everyone, and thank you for having me. Q1 at this point, we already have January and February data, which looked pretty good, all things considered. It was really before the shock hit the economy from the coronavirus. But the early March data has already shown a softening. So for Q1, we think we'll have a slight positive 0.5% growth, but we think Q2 is going to be really painful. We're looking for a steep drop in economic activity in the second quarter, with growth falling 12% on an annualized basis.
Wow.
Now, that is, that's a wow.
That's a wow.
That's the biggest drop we will have seen in post-war history. It goes back to 1958, where we had a 10% drop on an annualized basis. And frankly, it's not hard to get those types of numbers, considering the extent to which the economy right now is effectively shutting down. You have a number of cities that have put in place quarantine efforts. Restaurants are closing, stores are closing. We've had a big wealth shock as well, given what's happened in the markets, and that tends to lead people to want to save more and spend less. The manufacturing economy has been hit, given that this is a global shock, and factories have been impacted, and the supply chain has been affected. So there are a number of components to this shock that are all kind of working together that generate a very weak economy in the next few months.
Next few months.
Yeah.
Right, Paul? That's the question.
That's right. So Michelle, that's Q2. A lot of people are saying, okay, Q2, it is what it is. How about Q3 and 4? Is it a V? Is it a, kind of a U? Is it a L? Is it all just contingent upon how this thing continues to spread?
So there's two variables you would look at to try to determine that, and then I'll talk you through that and what our baseline forecast is. So the first one, of course, is, as you said, how the virus spreads. When do you see the peak in the rate of new infections? When does it start to look like we've reached the part of the curve where things are moving sideways in terms of infection rates, and actually people are starting to be cured and we're on the other side? So it's hard to have any confidence about that, of course. But if you look at the timeline in China, you can make the case that perhaps by the end of April, maybe early May, we can be at that point, hopefully, if we take the right steps here to contain the virus. The next thing you want to look at is the policy response, right? We're going to see a very big shock to the economy. Private sector growth is going to slow. People will be without income. Businesses will be without revenue. So the idea is, do you have a strong enough response from the federal government? Is there a big fiscal response that can pump money into the economy and offset that weakness? The other very important component is, will the financial system hold intact, right? That's what the Fed is really focused on right now. They want to make sure that there's market functioning, that there's liquidity in the Treasury market, that there's a flow of credit. So in a sense, you can make the case that the Fed is worrying about the liquidity and the credit crunch in the markets, and the federal government is worrying about credit in the real economy. And if both of those things, if they're successful on both of those, then yes, the recovery will happen. But of course, there's a lot of things that need to go right, and we need to see pretty aggressive measures here. Our baseline view is that we do start to see a turn higher in early summer. We think in the third quarter we will have positive GDP growth of 3%. Now you have base effects that are working more favorably, right? You have such a big level shock is what we're expecting. Even incremental improvement on an annualized basis from quarter to quarter, you will see some growth. So I would say it's not a V-shaped recovery by our estimates, but it is a recovery.
One question that I haven't heard a lot talked about is the effect of the global slowdown on the United States. I mean, there is an idea, there was at least when the trade war was heating up, that the U.S. was somewhat isolated from it, or at least a little more immune than other economies. And yet we are hearing about supply chain disruptions that are ongoing. We're hearing about the slowdown that's in Europe right now, with the UK possibly extending their self-isolation or their social distancing policies. We don't know what that means. But through the end of this year, how much of a feedback loop are you expecting on this sort of international front?
Yeah, so that raises a very important point, which is this is not just a shock that's hit the U.S., right? It is hit global. And in fact, we're, kind of later in the process when you think about how this has spread through the global economy. So when you have a global shock, that means it hits the financial system globally. It impacts the flow of credit globally, which is very important in what we saw during the 2008 crisis, which became global very, very quickly. And also the ability to see the flow of goods and services across borders, which are not happening right now, which creates a high level of inefficiencies. So for the time being, you should be assuming that globally the economy is in a recession. It is across the board, and borders will be largely closed. But the hope is that once you get to their side, once the recovery starts, you can start to see a flow of goods again. You can start to see greater efficiencies. And what brought the global economy down, hopefully in the end, will help to recover it in unison.
Michelle Meyer, thank you so much for being with us. Stay safe and healthy. Michelle Meyer, head of U.S. economics at Bank of America Securities, joining us. Really interesting to hear how different economic thinkers are even trying to get their heads around the potential ramifications of the coronavirus shutdown. And there's really a question. There's so many unknowns. I mean, we don't even know how big the layoffs are going to be. We don't know what the fiscal response is going to be. And we don't know, of course, at the heart of this, how long the virus is going to be the sort of main driver of economic and social activity going forward.
Yeah, that 12% decline in GDP in Q2, that number jumped out at me, certainly.
Indeed. Coming up, we're going to have more on this. I'm Lisa Abramowitz with Paul Sweeney. Tom Keene We are so glad to say we'll be coming back next week, back from vacation. This is Bloomberg Surveillance.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma.
The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
This is a Bloomberg Money Minute. Just ahead of the opening bell, the futures are climbing.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
It's across 30 states as businesses shut down because of the coronavirus containment efforts. Gina Cervetti, Bloomberg Radio.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions. Sometimes the simplest method is the best one.
I think even I could figure it out today.
Balance of Power with David Weston.
You had a high estimate. It beat your high estimate.
Weekdays at noon Eastern on Bloomberg Radio. Bloomberg, the world is listening. Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
And I'm Karen Moscow, along with Paul Sweeney and Lisa Abramowitz. The opening bell brought to you by SEI. Built on advanced technologies and 50 years of innovation, SEI offers asset managers a comprehensive and flexible operations outsourcing platform. Go to SEIC.com/IMS. Stocks higher at the open. The S&P 500 is up 0.9% or 24 points at 2433. Dow Jones Industrial Average up 0.8% or 163 points at 20,248. And the Nasdaq's up 1.6%. 0.5% or 115 points to 72.66. 10-year Treasury up 1 12/32. The yield 0.99%. Yield on the 2-year 0.38%. NYMEX crude oil down 2.9% or 72 cents at $24.50 a barrel. COMEX gold up 1.2% or $16.80 at $14.9640 an ounce. The euro 1.0695 against the dollar. The yen at 110.71. Paul and Lisa.
Thank you so much, Karen. And as Karen was saying, we are seeing a constructive tone in equities today. And there's a question, first of all, of whether it can last, because we know a lot can change, and it's come off significantly from earlier highs that were suggested in the futures markets, but also whether 2 straight days of gains will actually give some confidence, Paul, to markets at a time of so much uncertainty. I mean, we haven't had back-to-back gains since February 12th.
Yeah, exactly right. I'm just looking at the European markets as well. Some good strength over there with the stocks 600 up 2.5% as well.
And I'm trying to figure out how much of this is central bank actions actually working in markets. And Greg Bowdle, tracking all of this, BNP Paribas, a U.S. head of equity and derivative strategy, joining us now. And Greg, how much of what we're seeing, the sort of more constructive tone and the sort of greater stability across asset classes, stems from some of the central bank actions we've seen recently?
Yeah, good morning. Clearly markets are looking for signs of confidence from anywhere that they can get them. I think the actions that we've seen, coordinated actions, both from central banks and also in terms of what's going on in the background in terms of fiscal policy, will certainly help to bring some stability to markets. I think if we are able to hold on to the early indicated gains today, I certainly think that will help to drive a little bit of confidence in the market. I think it'll also be helpful if we're able to post modest gains. I think one of the things that's clearly been very unhelpful for investors has been the levels of volatility. So we had a massive one-day gain on Friday last week, but frankly, if we're able to get smaller incremental one-day gains, that's more likely to help the market find a level.
What are investors, what are people who you talk to gleaning confidence from as their compass, as their base? I mean, one of the sort of themes over the past few weeks has been how rudderless everyone has been, from economists to even scientists who have so many questions about how this will unfold. Where's the sort of comfort in the baseline assumptions?
Well, I think it's incredibly difficult for people to find confidence because there is so much uncertainty here. We have uncertainty about the path that the virus is going to take. We have uncertainty about the policy response. And ultimately for markets, what we really have uncertainty about is what that's going to do to demand in the long term, and what that's going to do for the bottom line for corporates. So one of the interesting trends we've seen under the surface is that things like the tech sector has actually performed relatively well. And we think the main driver for that is because there are a lot of tech companies that have strong balance sheets and are very cash generative. So I think the investors are certainly looking for corporates that they know are going to be able to survive this hopefully temporary situation and come out of this in a robust position.
So, Greg, when you talk to your clients, are they even focusing on things as mundane as valuation, or is this all just super macro? We need to see the virus kind of peak in the Western world. We need to see the fiscal policies be implemented. How are they thinking about the market these days?
Yes, I think valuation is a very tough thing to try and hold on to. I mean, if you think about whether you're trying to look at PEs or price to book or other ways to try and value corporates, ultimately you're relying on those inputs. So the simplest one to look at being a PE. The issue is we don't actually know what the E is. So markets look like, on the face of things, they've become a lot cheaper in terms of PEs. But ultimately what we're going to see over the coming months is a raft of downgrades, those earnings estimates moving lower. So I don't think valuation is going to be the crutch that people are going to lean on. Instead, I think what people are going to try and look for is some kind of inflection in the environment, not necessarily look for things to get better, but look for a slowing rate of things getting worse, and focusing on those corporates, as I mentioned earlier, that are in a position where they have a good, strong secular growth story and are going to be in a robust position when we do start to see some signs that the rate of deterioration does slow.
So, Greg, we've seen in certain asset classes, including treasuries, some concerns really building over the last week or so about liquidity. What have you seen in the markets that you play in the equities and the derivative markets?
Yeah, so liquidity is definitely a challenge, and what we're seeing in terms of the spread of this virus is a somewhat unique challenge, because not only are we dealing with market uncertainty and market distress, but you're also having a lot of operational uncertainty for a lot of players in markets. So liquidity has certainly been challenging. Bid offers have widened out in terms of every market. And one of the things that we've certainly seen in recent years is that liquidity and volatility are very inversely correlated. So the more volatile the market is, the less liquidity there has been available. And certainly when we look at some of the moves last week where we were seeing kind of back-to-back 10% moves in the S&P, that's going to create an extremely difficult environment for liquidity. If we're able to see volatility start to subside, it's going to remain somewhat elevated, but if it comes off these very high levels and if the VIX starts to trend somewhat lower, then that is going to incrementally improve liquidity, which will have a self-reinforcing impact in that liquidity begets liquidity and should help increase some of the confidence again in markets.
Greg, I'm wondering going forward, do we have a sense of what equities are pricing in terms of recession?
No, I think it's very hard to really quantify that. And also, I don't think you can think of things linearly in terms of whether equities as a whole are pricing in recession. What you see is that there's been massive differentiation between corporates that are stronger and those that are weaker. So, yes, everything has sold off. But as I touched on earlier, some sectors such as tech that collectively have good cash positions and more strength in terms of balance sheet have performed well. But if you look at something like the Russell as a major index, so a good gauge for the small and mid caps, they've had an absolutely torrid time. So they've pretty much halved in the space of a month. So I think clearly there's going to be some focus on those corporates who are going to be just struggling to survive through this period where there is an absolute kind of zero demand and a total slowdown, and those which can come out the other side. So I think thinking of things in terms of value is very difficult. Thinking in terms of what the market is actually pricing is also incredibly difficult.
Greg, a lot of people are talking about bailouts right now, and Washington, D.C. has put out some potential proposals with President Trump saying that he would back the idea of equity stakes for the government in companies that they help in this situation. And you were hearing about Hertz and Avis saying we're travel companies too and we're getting hit hard. What would a bailout type situation where the government gets equity in some of these companies look like in terms of how good or bad that would be for other existing equity holders?
Yeah, in terms of something like this, it's a very difficult thing to try and understand. I think people will look back to the situation with the banks in 2008 to try and get a guide. But I think certainly owning equity in a corporate that's receiving some form of bailout from the government is going to call into question, what type of valuation you should be putting on the common equity of those businesses. So I think that's why some of these corporates that have already seen a very torrid performance, if they do end up having to get some kind of state aid or bailout, it's probably going to, as a knee-jerk reaction, drive those equities higher. But I think you have to be careful assuming that there is therefore going to be a lot of kind of attractive value in the common equities of these businesses. They could suffer some quite aggressive dilution and may actually look to be more like value traps in the long run.
Hey, Greg, during this market volatility that we've experienced over the last several weeks, investors are, kind of eager to see if they can identify a sense of capitulation in the market. Have you seen any of that, or how do you kind of view that? It's a very tough thing to spot.
Yeah, it certainly is tricky. I mean, we've gone back and looked at kind of many of the previous crises over recent years to try and spot what we could see as capitulation points. Looking at turning points in things like the volatility markets is one way to see that. One of the things you do tend to see in equity markets is that volatility peaks before the equity market bottoms. So I think looking to things like the VIX complex to try and get a gauge on the sentiment is interesting. You do have to be careful, though, because I think that 2008, again, is a good example where we saw the VIX peak substantially before the S&P bottomed. So I think you go back to Q4 2008, I think it was November when the VIX peaked, so we had an environment of declining volatility after that point. But the S&P didn't bottom until March 2009, and there was some quite kind of significant declines in spot markets between December 08 and March 09. So I think looking for capitulation, one of the things we're going to see is that different markets will capitulate at different times, and there will be relative value opportunities between them.
Greg, thank you so much. Please stay safe and healthy. Greg Bowdle, BNP Paribas, U.S. Head of Equity and Derivative Strategy, joining us, trying to parse through some of the incredibly whipsawed moves over the past few weeks, saying that if today's move is modest, we can count that as a win, Paul. Right now,
exactly.
Let's get the news. Michael Barr has that for us. Michael.
Thank you very much, Lisa. Thank you, Paul. California Governor Gavin Newsom says when it comes to the coronavirus, this is a moment where we need some straight talk. Newsom ordered a shelter-in-place mandate for the state's entire 40 million residents. The move is the strictest yet in the U.S. to stop the spread of COVID-19. Newsom says the order restricts non-essential activities. However,
you can still take your kids outside practicing common sense and social distancing. You can still walk your dog. You can still pick up that food at one of our distribution centers.
Newsom says it is projected that as much as 56% of the state's population, or more than 25 million Californians, could be affected over an 8-week period. Mayor Bill de Blasio claims that federal help for New York has not arrived despite about 4,000 COVID-19 cases in the city.
Here in New York City, we are 2 weeks or 3 weeks away from running out of the supplies we need most for our hospitals.
Several U.S. senators are accused of profiting off the pandemic. Reports overnight say at least 4, including Intelligence Committee members Richard Burr, Dianne Feinstein, and James Inhofe, sold millions in stock in the weeks following a coronavirus briefing. The fourth, Kelly Loeffler, is married to the chairman of the New York Stock Exchange. Loeffler on Twitter says this is a ridiculous and baseless attack. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Lisa, Paul?
Michael Barr, thank you so much. Lisa, it looks like the gains we saw in the futures market are kind of petering out a little bit. We have the S&P down about 1.5 points. The Dow's up 23 points. NASDAQ continues to be the leader there, up 85 points. So kind of a mixed market. But again, as we were talking about earlier, Lisa, kind of a stable market, a little bit more boring market. Maybe that's okay in the intermediate, in the near term here.
Yeah, boring actually would be welcome. It still isn't boring because we still had limit up on the NASDAQ futures ahead of the open at one point. So things incredibly volatile still. That said, the VIX index is coming down just a bit. So you are getting a sense that perhaps people have petered themselves out. I mean, really, it's exhausting. This has been an exhausting week. And I think for everybody in the market who's been following the whipsaws and frankly living with all of the disruptions to their personal lives, it is just exhausting.
It really is, and I think you can kind of sense that a little bit in the market here. And as Greg Bottle from BNP Paribas was saying, keep an eye on the VIX to get a sense of kind of where we are in terms of volatility. It's at 67 right now. It had been over 80 just a couple of days ago. So, again, coming down just a little bit. We'll have more for you coming up. This is Bloomberg.
This is a Bloomberg Pursuits look at luxury. Stuck inside, scented candles may be the norm, but the ritualistic nature of incense makes it a better tool for achieving a zen-like state. So consider recreating a woodsy aroma from scent maker Cinnamon Projects and Furniture Studio Apparatus. In our test, their interlude incense, handmade in Japan and meant to evoke the smell of a violin case, with leathery frankincense, rosin, spruce, and floral iris and tuberose at a burn time of 25 blissful minutes. Another good news for homebound living. Movie theaters may be shuttered, but NBC Universal is putting its newest films online in response to coronavirus. For about $20, you can get a 48-hour rental of Trolls World Tour, The Invisible Man, Emma, and The Hunt, among other movies, as soon as March 20th. Cinema owners typically have a 70 to 90-day theatrical window of exclusivity before films go on demand and have fought fiercely to protect that. I'm Andrew O'Day, Bloomberg Radio.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Global news 24 hours a day, on air and at TikTok on Twitter. Powered by more than 2,700 journalists and analysts in over 120 countries. This is Bloomberg Radio. Now, a global news update.
Special report, coronavirus update. Steve Kastenbaum is in New York watching Wall Street opening in positive territory. Stocks inching their way up from yesterday's close.
Tech stocks were leading the charge. It's not surprising given how much of our world has been moving online, from classroom instruction to daily shopping to socializing.
The potential spread of COVID-19 prompts the governor of California, Gavin Newsom, to issue an order for the state's residents to stay at home. And that's not all Newsom is doing.
The governor's purchasing 2 hospitals. He's asked to have the Navy medical ship Mercy at the port for more capacity. He's purchasing more than 900 hotels and motels, striking deals with universities' housing. Still, he says, that's not enough. He says ordering people to stay at home is the only way to slow the spread and save lives.
There's Jim Roop. Wuhan, China, where the virus outbreak first took hold, reported no new infections for a second day in a row. I'm John Trout.
That saying, success breeds success, it's true.
Are we seeing any improvement?
Carol Massar and Jason Kelly.
How would you describe your outlook?
Weekday afternoons at 2 Eastern on Bloomberg Radio. Bloomberg Business Week, now live on YouTube. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and U.S. stocks have been fluctuating in a flood of trading caused by expiring options and futures contracts. Treasuries are rising. The dollar halted its rally as investors study unprecedented government measures to shield jobs and economies from the accelerated coronavirus pandemic. The S&P 500 erased an early advance. It is now down 0.9% or 20 points at 2389. The Dow Jones Industrial average down 0.5% or 97 points at 19,990. And the NASDAQ is up 0.6% or 45 points at 7196. The 10-year Treasury is up 1 10/30 seconds. The yield 1.00%, and the yield on the 2-year 0.38%. Crude oil, meanwhile, is lower even after stimulus efforts, and commodities all over are still roiled by the coronavirus effect. And joining us live with more is Bloomberg's Renita Young. Renita, good morning.
Good morning, Karen. Crude oil is headed for a weekly decline of more than 23%. This is amid an all-out price war between Russia and Saudi Arabia. And Russian President Vladimir Putin's refusal to submit to what the Kremlin sees as an oil blackmail from Saudi Arabia, it signals the battle will continue. The clash threatens to send oil down to $20 a barrel. Gold futures are trading higher as the U.S. dollar pauses its rally, yet gold futures are on the way to the second consecutive weekly decline. It'll also be the first back-to-back weekly drop since September. Most of the week, gold and other precious metals fell to the dollar's strength and the relentless selling of investors seeking liquidity wherever they could find it. Analysts, including at UBS, say now is the time to buy gold. And in other commodities news, the Bloomberg Commodity Index is still a little bit higher but lower on the year. And American exporters are selling soybeans and wheat cargoes to China. That's according to people familiar with the deal. And the threat of sick workers at U.S. meat plants are forcing policy changes. More on that on the Bloomberg Terminal. Back to you.
All right, Renita Young, thank you. And that's a Bloomberg Business Flash. Paul and Lisa.
Thank you so much, Karen. We appreciate that. Lisa, markets kind of rolling over. We had those futures up, but now pulling back both on the S&P and the Dow. So coming up, we have, let's go to emerging markets. Damian Sassower, Bloomberg Intelligence Chief Emerging Market Credit Strategist. Damian, thanks so much for joining us again. I was just mentioning to Lisa how we had some strong futures activity, but rolled over here in the opening. What are you seeing across your world in terms of emerging markets?
Well, Paul, I'm happy to report for once there is some green on the screen. EM currencies are rallying, behaving rather nicely, led by the high beta players. I'm talking, Brazil and Mex, some of those other ones. And look, we've been talking about it for the better part of the last 2 weeks, but I think a lot of it has to do with the fact that cross-currency bases are finally sort of normalizing a bit here. They've come back in, specifically in Europe. And look, that's kind of probably a function of the swap lines that the Fed has increased over the past few days.
So what are you seeing in terms of liquidity, Damien? We've seen in other areas some real concerns. How about in your markets?
Yeah, our markets are really relying again on U.S. money markets. Let's just think about it. A hallmark theme of the global financial order post-QE, Paul, has been the secular growth of sort of hedged books, hedged fixed income, credit, FX books, not just by, hedge funds, the traditional, but by life insurers and other non-bank institutions. And look, all of those leverage strategies are funded in money markets. They're funded specifically in the U.S. money markets. So when you see the sort of dislocations we've seen in liquidity, it sort of reverberates through the system, and I think that's why we're seeing a whole hell of a range of bad performance this month.
Right now, I'm trying to get a sense of going forward what to look for to determine whether we're getting stability, whether we're able to price something in, given the fact that we don't even know what we're facing. And I'm wondering whether we can glean that comfort today from the fact that there is a bid for longer-term treasuries, there's a bid for gold, there's a feeling, and the dollar, frankly, weakening, there's a feeling that the central bank liquidity is actually starting to take hold and smooth the market functioning. Would you agree with that assessment? Is that consistent with what you're hearing from traders?
It's certainly a little bit of a feeling this morning. I wouldn't say there's, the worst is anywhere near behind us. I think we're going to be in a bad place for a while now. I don't think these digital drawdowns are going to continue at the pace we've seen, though. Look, 20 of the last 21 days, Lisa, U.S. investment grade spreads have widened. They're up 3.3 times what they were back in mid-February. I think they were below 100, and now they're like at 330 or something like that. So, I agree with you. I think the bid we're seeing here in treasuries, specifically long-dated treasuries, is a bit long overdue. With all yields kind of going to zero, one would expect, the treasury market to be well bid here.
I'm trying to also understand going forward how investors are going to situate around a government bailout. And based on your experience going back to 2008 and 2009 and how markets responded at that point, do we have any game plan for how to treat assets of companies that are getting cash infusions by the government?
We do. I know a lot of people are now looking for us to go, down in quality for the Fed to start buying corporate bonds. I wouldn't necessarily go there yet. I think what they need to focus on is just, injecting liquidity into money markets, into the short end of the curve. But look, who's to say? It's going to be really bad. As I said, there's been a fundamental shift in the risk profile for a lot of, high grade and high yield corporate issuers. And so, the verdict is still out as to what needs to be done. For me, look, we've seen a lot of central bank rate cuts, not just in emerging markets, across the whole of developed markets as well this week. Russia left rates on hold today. They're a little bit of a unique case. But, real rates are going to plumb back into negative territory. And, that is a concern because it really does limit the extent to which, traditional monetary stimulus is going to be effective.
Damien, what do you think the impact might be on emerging market investing going forward? Are you concerned, or is there some talk out there that, boy, this rout has really been so shocking to so many investors that their risk tolerance going forward is going to take a long time to recover?
Well, I think in that, Paul, emerging markets are the one outlier. In emerging markets, we are used to this. In fact, most portfolio managers in my world position for these types of dislocations because, this is where they make the bulk of their money, right? You can clip coupons all you want, but, EM is used to, volatility, and, you have to kind of position for this. I think it's some of these other markets, specifically, as we mentioned, the U.S. credit market, where guys got caught blindsided. And look, it's not all bad out there. Don't get me wrong, the numbers are pretty bleak, but there are a few managers out there like Shenovari and who have done really, really well, who are positioned well for this, just the way they were in the global financial crisis. And so they're up. I think their dynamic credit cycle fund is up almost 100% this year. So there's certainly some players who, if they were positioned properly, if they were long credit vol into this, they're probably going to make out really, really well.
Damien Sassower, thanks so much, as always, for joining us. We always appreciate your perspective here. Damien Sassower, he's a chief emerging market strategist for Bloomberg Intelligence. We love having him on, getting his perspective. Mixed market right here. We're, just 25 minutes into the day's trading. We have the S&P off 5 points, bouncing all around. The Dow, again, also volatile today, up 89, 90 points right now on the Dow. That's 20,180 roughly. NASDAQ up 80 points, 7,229 on the NASDAQ. As Damien was mentioning, the Treasuries, we do have a bid in the Treasuries. The 10-year is up 1 and 12/32 right now, pushing that 10-year yield down below 1%. We're 0.9965% on the 10-year, back down below 1%.
Firms rely on BNY Mellon's Pershing to meet the needs of their most complex clients. Karen Novak, Chief Operating Officer at Pershing Advisor Solutions, explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC. Both members of FINRA and SIPC. Private banking and bank custody provided by BNY Mellon NA. Member FDIC.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or...
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
In the worst case, the economy could contract 14% in the period, outstripping the 10% plunge seen back in 1958. The difference between the two outcomes depends mainly on the severity of lockdown in the coming weeks and the effectiveness of fiscal stimulus. Gina Cervetti, Bloomberg Radio.
They don't just talk to the most important people.
Can you give us your broad sense of the main driver behind the latest weakness?
They talk with the most interesting people.
When you talk to your clients, are they taking this seriously?
Lisa Abramowitz.
What's going to be the main driver of growth?
Paul Sweeney.
What did you take away from those Amazon numbers last night?
Bloomberg Markets.
Is it as ominous this time around?
Weekday mornings at 10 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Are we on the brink of a more serious downturn?
I've always thought of the municipal bond market as a little bit of a safe haven.
Banks are going to have to start paying their depositors more.
Are we still in that mode where we're buying the dips?
Breaking market news and insight from Bloomberg experts.
Cash, if you're looking at
bills provides a higher return than stocks and bonds here in the U.S.
If your consumer is a woman, you're more likely to be a growth company.
Longer-term interest rates can go down, even with short-term interest rates still going up a little bit.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Good Friday morning from New York City to our worldwide audience. We made it to Friday. What a week it has been. We'll get you through the next couple of hours. We have the markets open. They are mixed. We will bring you the latest. Peter Anderson, founder of Anderson Capital Management. We'll get his views on how he's playing the market. Plus, we're also going to take a look at something interesting. What do we do with the tariffs that President Trump laid on a number of industries now that we have the crisis? We'll dig into that story. But first, let's go to John Tucker of Bloomberg News for a Bloomberg Business Flash. John, what do you have for us?
Yeah, good morning, Paul. Let's get the breaking headlines to the Federal Reserve. More action. Fed announcing a coordinated central bank swap line enhancements. That should get a boost to EM. Also, we got economic data just out. Existing home sales. Now, this is for February. They surged to a rate of 5.77 million on an annual basis. This, of course, is before the virus fears took hold. Now, expect wild swings in stocks today for the first time in a long time. We can point to something else. Derivatives of the stock index futures, the stock options, and single stock futures expiring simultaneously, quadruple witching. Right now, we have the major averages pretty much in the green. The Dow up 108 points. That's a rise of 0.5%. S&P 500, I'm going to call it flat for now, up less than a point. NASDAQ Composite Index up 92 points. That's up 1.3%. We're at 72.40. The 10-year Treasury yield headed for its lowest closing level since Monday. And the dollar right now, as measured by DXY, the dollar index, that is down about 0.7%. 10-year yield under 1%, 0.98. That's quite a bid for Treasuries, up 1 at 9/30 seconds right now. The second quarter may bring a contraction rivaling the steepest in history. Bloomberg's Economics anticipating a 9% contraction in real GDP in the second quarter. We check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Lisa.
John Tucker, thank you so much. I do want to bring you some breaking news right now. The Federal Reserve just announced coordinated central bank swap line enhancements. It says it'll act with the Bank of England, Bank of Canada, Bank of Japan, the European Central Bank, and the Swiss National Bank. The swap lines to commence on March 23rd, and they will go through the end of April at least. And this will be the dollar swap lines that they initiated over the past few weeks in order to ease up some of the dollar shortage and liquidity crunch there. Few days, I should say. It's been weeks, at least each day has felt like that. And meanwhile, they're going to switch each swap line daily from weekly, just showing this ongoing effort to try to ease some of the kinks in the workings of financial markets right now.
Yeah, global coordination there, at least. I think that's the key takeaway here. And again, it goes to that liquidity issue across markets that we've been talking about. So it's nice to see the coordination.
So Ira Jersey, Chief Interest Rate Strategist at Bloomberg Intelligence, we have him standing by here to give us his sense on how important this is. And we have seen some dollar weakness today, which has actually been a huge positive for global markets. I mean, are we seeing the beginnings of this bleed into markets? The Fed is actually being successful in easing some of the dollar shortage?
Yeah, so I do think that this type of activity in particular will be helpful for markets globally and primarily for those folks who have funded in dollars who aren't in the United States, right? So that's really where the funding shortage in dollars has been. People have been hoarding their dollars, wanting to keep them as a safe haven currency. So this allows basically for the flow of dollars in the global financial world to continue. And the fact that they're doing these weekly operations on a daily basis, I think, is important because that means that there's liquidity on demand. So the way that they did it before by only having an auction once a week is you only had liquidity on that day. You didn't have liquidity all those other days. So while I think the total dollar amounts might not be massive in this program, keep in mind they did get up to almost $500 billion during the crisis. So it's very possible that you could wind up with, $50 or $100 billion of usage in these swap lines every day. And so you wind up with a rolling $100 billion every day that basically helps the financial markets to work. Some of the other things that the Fed's done, I don't think will have a massive issue. Like last night, the Fed announced that they were bringing back the commercial paper, the money market funding facility. But quite frankly, money markets weren't really a problem this time. This is a much different crisis than 2008.
Well, I do want to, just before we let you go, because I know you've got a lot on your plate, there is still a question, though, about the demand for dollars. And I look at 1 month and 3 month T-bills. The rates on those are both negative. You can find negative rates currently in the United States. Is that a concern for you, given the fact that the lower bound for the Federal Reserve has been stated again and again is zero, and they are not planning to go negative?
Yeah, well, I don't think that that's a problem. I think that does show you the risk-off mentality that's still pervasive within the markets, and the fact that you have interest rates that are not going to go up anytime soon. The idea that you have T-bills that are still in demand. It's basically the safe haven of safe havens. If you have to buy securities and you can't hold cash, then you have to buy something, and that winds up being front-end T-bills. And this did happen. I mean, this did happen not so long ago. You look at 2011, you look at 2009, you had negative T-bill yields. So this is a rehash of that. This is almost like, whereas last time in 2007 and 2009, you had a significant it took a little while for all of this to happen. This is kind of just a sped up version of risk off. Yeah.
Hey, Ira, thanks so much for giving us a few minutes. We know you're busy, but we appreciate your insight there. Ira Jersey, Chief Interest Rate Strategist for Bloomberg Intelligence. Looking at the markets here, we are slightly green on the screen. Let's see where the action is. Bloomberg Stocks Editor Dave Wilson. Dave, what are you looking at this morning?
Well, even though we were green, I should say that the S&P 500 has now turned lower by 0.1%. You have more stocks down than up. I mean, you're seeing department stores are one area that jumps out because, you had Kohl's closing all of its U.S. retail stores, more than 1,100 locations until at least April 1st because of the coronavirus. Kohl's is down about 7.5%. You're seeing Macy's and Nordstrom fall as well. And then there's the story of AT&T, and that's a pretty interesting case because this is a company that's been buying back stock that they issued when they bought Time Warner. They had a $4 billion program in place to do that after a previous one in December, what they call an accelerated share repurchase program, worked out with Morgan Stanley. Pretty common for companies to go this route. So today, AT&T comes out and says, we're canceling the current program, and we report that AT&T is going for $3 billion in loans to try and bolster its finances. So you put that all together, you've got AT&T down 6.5%. So, I mean, it's really two sides of the same coin in a sense. Companies pulling back from buying back their shares, even though they're way down clearly from where they were just a month ago, and increasingly having to line up financing at the very least to make sure that they can keep their business going.
Dave Wilson, Bloomberg Stocks Editor, thank you so much for the update and for keeping us posted. We'll continue to have discussions with you throughout the day to keep abreast of everything that's going on. I do want to bring you this. We do have a post on Twitter by Stephen Mnuchin, the head of the Treasury Department, saying, at President Trump's direction, we are moving tax day from April 15th to July 15th. All taxpayers and businesses will have this additional time to file and make payments without interest or penalties. This was expected to some degree, given the fact that so many people are sequestered in their homes and can't go out to necessarily get to their accountants or necessarily do all the work that they need to do. Also, perhaps if they have bills to pay, particularly small and mid-sized businesses, for their taxes, they can hold on to that and use it for an extra cash buffer in the meantime. Again, tax day being moved from April 15th to July 15th. Interesting.
That's helpful. I think it's going to be helpful for a lot of people.
I think it'll be helpful for me. Right now, let's head over to our 99.1 studios in Washington, D.C. Nathan Hager with World and National Headlines. Nathan.
Well, it is interesting to see a lot of these developments as governments around the world race to stem the economic impact from a coronavirus that appears to be gaining speed in terms of the infection rate. Today, Spain reported a more than 30% jump in deaths Johns Hopkins University says the disease has now killed more than 10,000 people worldwide, and the World Health Organization says it took 3 months to reach the first 100,000 infections around the world. The second 100,000 came in just 12 days. The Trump administration is pushing Congress to pass another massive round of stimulus by Monday. Senate Majority Leader Mitch McConnell unveiled a proposal last night that includes tax rebates for many Americans and more than $200 billion in corporate loans.
We need to have the American people's backs. This legislation is a significant next step.
Democrats are pushing for more unemployment insurance and Medicaid expansions. 4 U.S. senators sold stock after getting sensitive briefings on coronavirus in late January. That's around the time the Trump administration was still downplaying the threat of a pandemic. Senate Intelligence Chair Richard Burr and 2 other Intelligence Committee members sold shares, as did Republican Kelly Loeffler. Her husband is chairman of the New York Stock Exchange. Air traffic controllers at New York's JFK Airport Tower are being forced to work at an alternate location right now. That's after a technician at the facility tested positive for COVID-19. The Federal Aviation Administration says the airport remains open as the agency cleans that tower as a precaution. Global news, 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nathan Hager. This is Bloomberg.
Have you ever thought, I wish I'd had that information sooner?
What does this tell us about the state of deal making?
Let's fix that.
One unprofitable company plus another doesn't make a profitable company.
Carol Mazur.
Talk to us about real-world applications.
Jason Kelly.
Remind us what the potential is for everyday folk.
Bloomberg Business Week.
Vice President of Exploratory Science is one of the cooler titles.
Weekday afternoons at 2 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg Business Week, now live on YouTube.
You took the first step and quit smoking, but even former smokers may still be at risk for lung cancer. That's why SaveByTheScan.org wants you to know about a new low-dose CT scan that can detect lung cancer early. It takes only 60 seconds and could save your life. You took the first step, now take the next. Visit SaveByTheScan.org for a simple quiz to see if you're eligible and talk to your doctor about screening. SaveByTheScan.org is brought to you by the American Lung Association's Lung Force Initiative and the Ad Council.
What if you could keep the top economic experts in a conference room next to your office without having to feed them?
Do we need better optics? Do we need some substance?
Do CEOs care about ESG?
We have seen quite a lot of stimulus pumped into the system already.
It's the biggest warning yet about the financial risks of climate change.
Now there are more ways to hear us. Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and at BloombergRadio.com. Bloomberg, the world is listening.
Hi, I'm your host, Smokey Colbert, filling in for Smokey, because after 75 years of...
Only you can prevent wildfires.
Turns out there's much more to say. Nearly 90% of wildfires are caused by us humans being careless, dumping our used barbecue coals willy-nilly. Guess the song was wrong. We did start the fire. That's why I respect Mother Nature and her trees, whether coniferous or new car scented. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Are you interested in a challenging...
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
At 10 Eastern.
They're spending a lot of money there.
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Melissa from Michigan. I work an extra part-time job serving lunch at my child's school, but I still can't afford to put food on our table.
Daniel from California. Choosing whether to pay the rent or pay to fix the car to get to work doesn't leave us with much at all. Now we can't even pay for meals.
Hunger is a story we can end. End it at feedingamerica.org. Brought to you by Feeding America and the Ad Council.
Hey, y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks are reacting positively right now to the latest news from the Federal Reserve, the central bank of the U.S., along with the central banks elsewhere, Europe, Japan, UK, Canada, Switzerland, will coordinate their actions to beef up the dollar liquidity swap line arrangements. That increases the frequency of the 7-day maturity operations from weekly to daily basis right now. The Dow Jones Industrial Average up about 0.5% right now. That's a 98-point rise. We're at 20,192. S&P 500 up 4. That's up 0.2% at 2414. And the Nasdaq Composite Index 111 points higher. That is up 1.6%. We're at 72.62. Now keep in mind, volatility, it is lower today. The fear index, as we sometimes call it, the VIX, down almost 16%. We're at a 60.58 level. That's still elevated, but a lot less than the over 80 that we saw just earlier this week. As we look to the DXY dollar index, right now down 0.9%. 10-year yield has got a bid up 1 4/32. That's got the yield down 12 basis points to just about 1.01%. We check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Lisa and Paul.
Thank you so much, John. We are looking at markets that are trying to find some calm after a storm that was the biggest storm ever. If you look at the VIX index, and was certainly included some of the biggest whipsaws since 1987, Black Monday. And the question is, how do you find sane? How do you find sanity? How do you find a compass amid a complete dearth of any information? Peter Anderson, a voice of reason, a voice of calm, founder of Anderson Capital Management, joining us now. Peter, thank you so much for being with us. What's going to help people stay sane as they invest their money in this kind of environment?
Well, Lisa, I know that you've talked to a lot of investors and a lot of investment managers, and I thought I'd take a little bit of a different take. Instead of just going back on histories of sell-offs and how we react, I thought I could propose a couple everybody out there, because I think most investors are feeling really uncomfortable about the information and how they should act on this information. And if we could just get some simple categories, I think that might help people. So I have a couple of suggestions. The first thing is this concept of leading versus lagging indicators. Now, we've used those a lot in economics and investing, but probably not so much when we're talking about something like the virus. And if you recall, Dr. Fauci recently mentioned, he made a little bit of a reference to this when he said, look, what we're seeing now are the results of what the virus did 2 weeks ago. So I find it very helpful whenever new information comes, I put it in a category, is this leading indicator or a lagging indicator, and what should I do if it is lagging? It doesn't matter that much to me, but the leading indicators are the things I think we should focus on.
Interesting. Peter, so as we think about this market volatility, are you suggesting to your clients that they sit on the sidelines and not panic and maybe take the longer view here? And if so, are you having any success with that?
Well, I am. I've talked to all my clients, and most of them are sane and mature, that they say, look, I've seen versions of this in the past. The virus is a new twist, but in terms of sell-offs, we've been here before, and we also are quite familiar with the way we react psychologically and from a behavioral perspective. So why don't we focus on what the leading indicators are? And so to me, the leading indicators are when we have the press conferences every day, I tell them to focus on the following. What is the news about the vaccination? What's the news about trends in the current cases, not the past cases, but what might be happening in the future? Because when we get these cases reported to us now, they're just going to get worse because it's the results of the virus in the past. So looking forward also, let's think of, do they announce new innovative approaches? For instance, yesterday they mentioned cruise ships could be available for hospital beds. I think that's very creative if we need that. Yeah. They've also mentioned drive-by testing. So the more creative we get with this and the more we get a handle on when the virus is going to peak, that is the main driver of everything. Everything else, to me, is expendable at this point, but we should focus on what are the leading indicators to tell us when we think this might crest, and then we're off to the races, because then we have a data point and we can say, okay, what should our actions be as a result of now knowing that we've reached the maximum case accumulation?
Well, and speaking of press conferences and paying attention, we will bring you some comments by Treasury Secretary Steve Mnuchin and House Majority Leader and Senate Majority Leader Mitch McConnell. They will be joining shortly, and with some comments that they gave in Washington, D.C. And we will bring them to you when we get them. But there is a question when you start talking about how people have been through this type of thing before. Have they? I mean, this is sort of one thing that I'm struck by. The speed that this has occurred has just been so dramatic that in some ways it feels like perhaps this is a different kind of sell-off and a different kind of economic downturn than we have seen in modern history. Do you agree?
Yes, I do. I mean, to a great extent, of course. When you look back at the major sell-offs, each one has its own story and its own cause. And who would have expected something like a virus to have this major world impact? So I agree with you on that level. However, I also say that we can look back at how we react to each one of these surprises.
I think we've lost his feed, Peter Anderson. That was founder of Anderson Capital Management, joining us by phone. Really interesting trying to find that compass right now amid a sea of uncertainty, Paul.
Yeah, it really is, Lisa. And I think a lot of investors, if they haven't already panicked, I think they're obviously looking at their portfolios, looking at their 401ks and just kind of in shock here. But, I think one constructive thing is to really take a look on the other side. When we do get to the other side, how do you want to be positioned? What do you want to maybe look at in terms of some investment opportunities? So that's hard to do right now as we continue to see the volatility in the markets. But I think that's what Peter was suggesting that his clients do.
You know, one thing I'm struck by is how different it is that everybody's personal lives are being disrupted at the same time. It's harder to have a level head when it's hard to even find a sense of normalcy in your own surroundings. And I do think that weighs into it a little bit.
It does. It really does. So we thank Peter Anderson for joining us. Peter Anderson, founder of Anderson Capital Management, giving us his thoughts here. The markets have turned green here across the board for the equity markets. We have the NASDAQ up 0.7%, the Dow up 1%. So kind of a whipsaw market, as Lisa and I have been talking about, positive right now. This is Bloomberg.
This is a Bloomberg Money Minute. After a week of breathtaking losses, it's something like a normal day of trading. The Dow is up 51, the NASDAQ up 71, the S&P down 5. It helped the Federal Reserve announce some coordinated actions with central banks in Japan, Canada, the UK, Europe, and Switzerland to make dollars more available to foreign institutions. Home sales surged to a 13-year high last month, but that was before the coronavirus and its wave of closings and layoffs. The National Association of Realtors says existing home sales jumped 6.5% last month. Costco saw a big surge in sales last month with shoppers trying to stockpile items. Now the warehouse chain is limiting the number of people allowed in at any one time and limiting purchases of in-demand items, too. It's also boosting its efforts to sanitize. The boost in shopping online is helping one transportation company rolling forward, UPS, with its deep ties to Amazon, and that helped it hold its place on Wall Street. I'm Joan Doniger, Bloomberg Radio.
There are everyday actions to help prevent the spread of respiratory diseases. Wash your hands. Avoid close contact with people who are sick. Avoid touching your eyes, nose, and mouth. Stay home when you are sick. Cover your cough or sneeze. Clean and disinfect frequently touched objects with household cleaning spray. For more information, visit cdc.gov/COVID-19. This message brought to you by the National Association of Broadcasters and this station.
The Bloomberg Business of Sports podcast.
How did the Yankees become this mega valuable team?
Where the money is flowing inside sports around the globe.
From the marketing perspective, where are the dollars spent?
From union heads to team owners, Scott Soshnick and Michael Barr speak to the names that power this multi-billion-dollar industry.
Boston Red Sox CEO Sam Kennedy.
National Hockey League Commissioner Gary Bettman.
Bloomberg Business of Sports. Listen today on Bloomberg.com, the Bloomberg Business app, or subscribe on Apple Podcasts.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
We'll figure it out. When something feels different, it could be Alzheimer's. Now is the time to talk. Visit alz.org/ourstories to learn more. A message from the Alzheimer's Association and the Ad Council.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/seize change.
business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
1 in 3 adults has prediabetes. 1 in 3. That means it could be you, your football buddy, your football buddy, or you, and your worst man. You, your dog walker, your cat jogger. While 1 in 3 adults has prediabetes, with early diagnosis, prediabetes can be reversed. Take the risk test at doihaveprediabetes.org. Brought to you by the Ad Council and its Prediabetes Awareness Partners.
Sometimes the simplest method is the best one.
I think even I could figure it out today.
Balance of Power with David Weston.
You had a high estimate. It beat your high estimate.
Weekdays at noon Eastern on Bloomberg Radio. Bloomberg, the world is listening. Broadcasting live from the Bloomberg Interactive Brokers Studio in New York.
Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
Coming up here on Bloomberg Markets, we take a look at the international policy with respect to trade amid the coronavirus, supply chains, and the taxes, the tariffs that the U.S. put on China. Should the U.S. roll them back? Plus, we'll take a look at the oil market as the Saudi Arabia-Russia standoff continues. Right now, though, let's head over to John Tucker for a market update right now. John.
Okay, Lisa, let me start with something a little different. Let's start with volatility. It is below 60. We're seeing a drop. The Fear Index, the VIX, down over 18% right now at 5880. Stocks are on the rise. The major indices, the Dow Jones Industrial Average, up 288 points. That's a rise of 1.4%. The S&P 500 and the broader index, 27 points higher. That's up 1.1%. The Nasdaq Composite Index is rising 2.2%, up 160 points right now. A few things going on. The S&P 500 did reverse the earlier losses as we got this announcement from the U.S. Central Bank, a coordinated action with the global central banks to try and beef up dollar liquidity swap line arrangements. Now, as we look at a measure of the dollar right now, that is down almost 1%, a dollar DXY, so maybe that's giving some relief as well. We're seeing the 10-year yield right now, right around 1%. There is quite a bid to the benchmark 10-year note, up 1 2/32 in price. That is a big whopping jump there. Treasuries, as I say, rising, the dollar halting its rally. Investors studying the government measures there. And we check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Lisa and Paul.
John Tucker, thank you so much. It is 10:33 on Wall Street. Time to check in with Bloomberg Opinion. We're joined by Bloomberg Opinion columnist Brooke Sutherland, who's out with a fantastic column. And this is the headline I like. Want ventilators? Roll back Trump's tariffs. Brooke Sutherland, what do you mean by, if you want ventilators, roll back Trump's tariffs?
Well, I mean, I think it's sort of a two-part issue. So on the one hand, I mean, I think it's worth remembering that, these tariffs that were put in place did affect medical goods that we shipped over from China. So this includes face masks, hand sanitizer, protective gear that is now very much in demand. And the Trump administration did, offer exemptions for those products, but they did that very recently ago, as in, 1 to 2 weeks ago. And at that point, some of the damage is already done. I mean, we've already then shifted the flow of goods now to places like Europe, which of course are battling their own issues with the coronavirus and may in the future be less willing to export some of those products to us. And then, it's also an issue of whether or not, we're necessarily the customer of first choice for Chinese suppliers. The Peterson Institute did a really great piece on this, just looking at the ways in which it changes incentives when you do have those tariffs in place. So that certainly is not helpful. But I think about it also, the second part of this is just in a broader sense, manufacturers are getting hit really hard by this, whether that's just, a total drop off in demand or a disruption of their supply chain. And the tariffs just seem like an extra tax that makes this harder on them. It just seems unnecessary. And that's particularly true at a time when we're really starting to